talking about your documentation chapter. Basically, the provisions is discussed in your section 31. Section 31 talks about your documentation chapter. Section 31. Tax invoice is discussed in various provisions. Starting at Rule 46, contents of tax invoice. 47, time limit to raise tax invoice, which we have already discussed for goods and for services. This we have discussed when we discussed your time of supply. Manner of raising tax invoice. Invoice should be given in 3 copies. Original for the recipient, duplicate for the transporter, triplicate for yourself. Rule 53 talks about your revised tax invoice as special case, and 54 talks about invoice in special cases. There are certain sectors where you have to reduce something in tax invoice or where you have to add something in tax invoice. Then you have bill of supply. This bill of supply is entirely discussed in Rule 49. Rule 49. Then you have something called as receipt voucher and refund voucher. It is for advances. It is for advances. Receipt voucher is discussed in Rule 50, refund voucher is discussed in Rule 51. Then in RCM cases you have something called as self-invoice and payment voucher. This payment voucher is there in your Rule 52. Self-invoice is nothing but a tax invoice raised by the recipient. This you have discussed in your ITC chapter. Tax invoice raised by the recipient. Technically speaking, there is nothing called a self-invoice. It is nothing but invoice raised by a tax invoice raised by a recipient. Then we have something called as certain points which are common for both tax invoice and bill of supply. There is a combo document called as tax invoice cum bill of supply. In certain special cases, you will have a combo document called as tax invoice cum bill of supply. It's invoice, tax invoice cum bill of supply when you are giving both taxable goods or services and exempt goods or services. And Rule 55A, which tells that whether a person in charge is carrying e-way bill or not, he should carry tax invoice or bill of supply. Whether a person in charge is required to carry, he may be exempted from e-way bill, but basic document he should carry. Basic document he should carry. So that is Rule 55A. Now 31A talks about something called as dynamic QR code for payment. Certain suppliers should give mandatory option to the recipient for digital payment. Not every supplier, certain suppliers should give mandatory option to the recipient for making digital payment. So if I am that supplier, I should give a mandatory option for you to make digital payment. You may make digital payment or not, that is your will and wish. But I should give that option to you. I should give that option to you. Section 32 and 33 will complete it here itself. If I am unregistered, I cannot collect tax. If I am unregistered supplier, I cannot collect tax. That's it. Full stop. Section 32 over. If I am unregistered supplier, I cannot collect tax. And Section 33 talks about registered supplier. If I am registered supplier, I can collect tax, but that should be as per law. Whatever is the correct tax, I should collect only that. And I should give the breakup of the tax on my invoice and other documents. 2 points. If I am unregistered, I can never collect tax from the customer. Section 32. Full stop. Section 33. If I am registered, I can collect tax from the customer, but that should be as per law. If it is 12%, I should collect 12, not 80. Second, I should give the breakup of price and tax on all my records. So on my invoice, on my other details, there should be breakup of what is my price and what is the tax. So that is section 33. Section 34 talks about your debit note and credit note, which you have discussed in detail when we have discussed your valuation chapter. This is the contents are discussed in your Rule 53 and Rule 55. For delivery challan, directly there is rule. It talks about your delivery challan. It talks about your delivery challan. These are all the different documents that we are going to discuss. Now understand that whenever you are talking about a document can be a written document, manually fully handwritten document, or it can be printed document, it is printed, or it can be an electronic document as per Information Technology Act. So normally if you go to very small shop, you'll have written, or if you go to an average shop, you'll have printed, right, isn't it? And if you go to a very big store, you'll have an electronic document. Do you nowadays get the movie ticket? But it is an electronic document, correct? It is an electronic document. So it can be written, it can be printed, or it can be electronic record. Now, what are the different documents that we have discussed? We will try to consolidate them, how to read it. If there is supply, or if there is no supply but movement of goods, if at all there is movement of goods, and if at all there is supply, base invoices, tax invoice, or bill of supply, e-way bill is a supporting document. That is there in your e-way bill chapter, supporting document. If there is no supply, the base document is delivery challan. If there is supply, tax invoice or bill of supply. If there is no supply, there is delivery challan. That is delivery challan. Now, that is all about your tax invoice, bill of supply and delivery challan. When you talk about advances, which is relevant only for services, because you have seen time of supply, it is relevant only for your services. When you get an advance, it is receipt voucher. It is receipt voucher. When you get an advance, it is receipt voucher. When that advance is refunded back, at times the advance is received, service is not happening, and you refund back that advance. It is refund voucher. It is refund voucher. Now, if at all it is all about RCM. In case of RCM, when you have a particular receipt of goods or services which is taxable under RCM, plus supplier is unregistered, then self-invoice. Two conditions: RCM, supplier unregistered, then recipient will raise self-invoice. But when recipient is making the payment to the supplier, whether the supplier is registered or unregistered, he will give payment voucher. RCM will have two documents. Supposing I am the recipient, you are the supplier. If I am getting that service from you, if you are registered, you will give tax invoice. If you are not registered, I will raise self-invoice. But when I am making the payment to you, whether you are registered or not registered, I will give payment voucher. I will give payment voucher. Next, document for changing tax invoice. For converting your accounting invoice to tax invoice, you call it as revised tax invoice. This will happen only two times: birth, rebirth, taking new registration, revocation of suspension. Revocation of suspension. Your accounting invoice you are converting to tax invoice. You did not collect the GST. Now you want to collect GST from your customers, so you will give revised tax invoice. This is process of conversion of accounting invoice to GST invoice. This will come only in two cases: birth, rebirth, new registration and revocation of suspension. Now, if I want to correct my tax invoice, change anything in my tax invoice, changing the value or tax on my tax invoice, the only possibility for that is credit note or debit note. Credit note or. So if you understand this, you will understand all the documents in a more clear manner. One, where you are talking about tax invoice, bill of supply, delivery challan, that is all about movement. Then you are talking about your advances, receipt voucher, refund voucher, then RCM, self invoice, payment voucher, then changing your invoice. Either it is revised tax invoice or credit note, debit note. Credit note, two thumb rules you have to understand. Two thumb rules. Always in GST, whenever you are talking about document is always given by registered person. Always given by. The only exception where unregistered person can give document is delivery challan. All the other documents that we are going to discuss in this chapter is given by a registered person. Is given by a registered person. The only place where document is given by an unregistered person is delivery challan. And likewise, the second thumb rule. In GST, whenever you are talking about document, you are always talking about supplier giving the document. This we have discussed when we discussed your debit note, credit note. Look from the angle of the supplier. So all the documents that we are talking about is from the angle of supplier. Supplier has to give all these documents. But the only exception is when you talk about your RCM, self-invoice and payment voucher, they are given by the recipient. So two different thumb rules. All the documents given by registered person, exception, delivery challan. All the documents are from the angle of supplier, given by the supplier, exception, self-invoice and payment voucher. They are given by the recipient. They are given by the recipient. So one needs to understand that very clearly. Now talking about your tax invoice and bill of supply, as I said pretty clearly, it is only consolidation of different points that we have discussed here and there. Only consolidation of different points that we have discussed here and there. So first let us start with your tax invoice and your bill of supply. Now understand that when you are talking about your tax invoice and your bill of supply, who is required to give tax invoice? A registered supplier will give tax invoice for taxable goods and services, and that person will not be under composition scheme. Tax invoice is always for taxable goods and services because it will be with GST. It will be with GST. And secondly, you should not be under composition scheme. Why? If you are under composition scheme, you will give something called as bill of supply. Or if you are under regular scheme, but you are supplying exempt goods or services, you will be giving bill of supply. You will be giving bill of supply. Are you clear with this understanding? Are you guys clear with this understanding? Now, can you give a combo document which is tax invoice cum bill of supply? Possible. If I am a regular taxable person. If I am a composition taxable person, always my document is. If I am a regular taxable person, for my taxable item, tax invoice. Exempt item, bill of supply. But if I am giving my taxable item and exempt item together to a customer, can I give a combo document? Rule 46A. Yes, I can give something called as combo document. Tax invoice cum bill of supply. Tax invoice cum bill of supply. When I am supplying both taxable item as well as exempt item to the same customer at same point of time, I need not give tax invoice separately and bill of supply separately. I can give a combo document, tax invoice cum bill of supply. But condition. But condition. My customer should be unregistered. Let me make it very clear. Two customers are there. So the examples given there in the conceptual questions, most of the examples I will cover it here itself. If required, I will touch that, or otherwise I will cover it here itself. There are two customers of mine. One is registered, one is unregistered, and to both of them I am giving taxable as well as exempt items. Few taxable items, few exempt items. Few taxable items, few exempt items. If my customer is registered, for the taxable items I have to give a separate tax invoice. For exempt items I have to give a separate bill of supply. Two documents. If my customer is unregistered, I can give a combo document, single tax invoice cum bill of supply. There are no other conditions. Right? Because why I am telling there are no other conditions, the next point you will be a bit confused. Normally, this is one special point. Now, second special point that we are discussing about both. Normally, for each transaction, there will be tax invoice or bill of supply. So, if I have 100 sales, there are 100 tax invoice or 100 bill of supplies. Correct? But they have some special point, special case. What is that special case? If at all, there are three conditions to be satisfied. Value of each of the transaction is less than 200 rupees, including tax. Customer is unregistered and He is not demanding separate tax invoice or bill of supply. You are actually talking about retailers, where the customers are unregistered, where each of the transaction is less than, not less than or equal to. Mind the words. If it is less than, which means 199 or less. It is not less than or equal to. It is not up to. It is less than 200. It is less than 200, including tax. Including tax, less than 200. Customers are unregistered. They are not demanding separate tax invoice. Then what I can do, rather than giving them separately the tax invoice or bill of supply, is true for both for tax invoice or bill of supply. When my day is ending, I can raise consolidated tax invoice or bill of supply for all such transactions and keep it for myself. I will not give to anyone. I will keep it for my records. Are you clear with this understanding? Let me make it more clear. All these examples are given in a conceptual questions. I will make it more simple here itself. All of you are my customers. And assume that one of the customer is registered. Less than 200 rupees. I don't have an option. I have to give separate tax invoice or separate bill of supply. Taxable means tax invoice, exempt means bill of supply. My second customer is unregistered, but she is purchasing for more than 500 rupees. Obviously, 500 rupees means it is more than or equal to 200. I have to give a separate tax invoice or bill of supply. My third customer is unregistered. Her purchase is for 150, but she is demanding separate tax invoice or bill of supply. I have to give her. First case because she was registered. Second case because the value was more than or equal to 200. Third case because she is demanding. All my other customers, each one of you are unregistered. To each one of you have sold the item for less than or equal to, for less than 200, not less than or equal to, for less than 200. And you did not demand separate tax invoice. So what I can do? For all the other transactions where all the conditions are satisfied, the value is less than 200 including tax, you are unregistered and you did not demand separate tax invoice or bill of supply. For all your transactions, by the close of the day, end of the day, I can raise a consolidated tax invoice or consolidated bill of supply for my record purposes. I need not give you separate document. Are we clear with this understanding? Are you guys clear with this understanding? Yes or no? Yes. This is not applicable for multiplex screens, multiplex status. This is applicable for every other supplier, but it is not applicable for. Just think of this example. When you are watching a movie, going to Spy Cinemas or any other, say INOX, anywhere, PVR cinemas, ticket value is say 150 rupees. You are unregistered. Value is less than 200. You are not demanding a separate tax invoice, but still you are getting it. Still you are. For them, this option is not available. For all other suppliers, this option is available except multiplex screens. If it is a normal theatre, they can do it. Go to a normal theatre. You will get a ticket, you will not get an invoice. You get a ticket, but ticket is not always invoice. Multiplex screens, whatever they are giving is invoice. You will get the breakup of GST, everything. Normal theatre will just give you a tickets. Right? Can they exercise this option? Yes. Can any other supplier exercise this option? Yes. Who is the one person who cannot go for this option? Multiplex. Are we clear with this understanding? Are we clear with this understanding? Now, before even touching other aspects, one aspect I want to immediately take because it is very much connected to that aspect, very much highly connected to that aspect. I am talking about special sector, Rule 54, special sector, where you are talking about insurance and banking sector. Both banking sector as well as insurance sector. Banking sector as well as they also have an option to give consolidated tax invoice or bill of supply for all the services given during a month. What is the difference? What was the difference? That was also consolidated tax invoice bill of supply. This is also consolidated tax invoice bill of supply. That was end of the day. This is end of the month. First difference. Second, That is for all sectors except multiplex. This is only for banks and insurance. This is only for banks and insurance. Second, other difference. Important difference. That is conditional. Customer should be unregistered, less than 200, not demanding. This is unconditional. This is unconditional. No conditions. No conditions. And the most important difference. This difference you can easily get. Most important difference. That was for multiple transactions of multiple customers during the day. Multiple transactions of multiple customers satisfying the conditions during the day. This is for multiple transaction of the same customer during a month. Which means if banks are having 1 lakh customers, they will be giving consolidated tax invoice 1 lakh. They cannot club different customers. 1 lakh. I repeat, that was multiple transactions, multiple customers during that day. This is multiple transactions of a particular single customer during a month. So banks are having say 1 lakh customers. To each of the 1 lakh customers, they have to give consolidated tax invoice. I'll make it very simple. See, if for every transaction, the bank will charge some charges. Say, for a company is having, is doing NEFT thousands of times during a month. Normally, bank should give 1000 tax invoice, NEFT charges, which is very difficult. This is very difficult. So banks, what they will do for that company, for thousands of NEFTs and RTGs and other services, other transactions where bank charge something with GST, bank will give single consolidated tax invoice to that customer for all these transactions. To the other customer, there will be a separate consolidated tax invoice given to him for all his transactions. And if you understood it, last point is very simple. That consolidated tax invoice or bill of supply will be with myself. I am not given to anyone. But this consolidated tax invoice or bill of supply is handed over to each of the customer. You're getting the difference? You're getting the difference? That was consolidated tax invoice or bill of supply on satisfaction of 3 conditions raised during a day. Kept with supplier himself. Multiple transaction, multiple customers kept with supplier himself. This is only for banks and insurance where you're talking about giving consolidated tax invoice or bill of supply for multiple transaction of a single customer. During a month, not a break, during a month. And this consolidated tax invoice or bill of supply will be actually given to each of these customers. It will not be kept with the supply, it will be actually given to each of these. No conditions. Whether you are registered or unregistered, whether the value is less than 200 or more than or equal to 200. No conditions. It is true for all. It is to remove the difficulty in this sector. Otherwise, banks cannot keep giving for every NEFT and RTGS or every transaction where bank is charging something. If it keeps giving invoice, then bank administrative work will increase too much. Are we clear with this understanding? So difference between that and this. Now, talking about due date. This due date of issuance of invoice and on bill of supply. This I am not going to touch because we have discussed clearly in your time of supply, isn't it? This entire thing was clearly discussed. Step 1 in forward charge mechanism for time of supply, there are 2 steps. Step 1 is due date of invoice. Step 2 is time of supply. Step 1 was exactly the same. The same thing was given there. Even while discussing your time of supply, it was clearly said that this part belongs to your document chapter. Now, coming back to special cases. Let us again focus on your special cases. First special case is banking and insurance sector. Banks and insurance, will have something called as consolidated tax invoice or bill of supply, which we have discussed. What is the other special point? Banks and insurance need not serially number their invoice. Normally, others person should have they should serially number their invoice, but they need not have serial number on their invoice. Second, they need not have recipient's address. Name should be given, but address is not required. Name and GST number should be there, but address is not. Invoice number not required. Address of the recipient not required. Invoice number not required. Address of the recipient not required. And they can give electronic document. They can give electronic document as per Information Technology Act. This is for banks and insurance. Next is for GTA. For GTA, for your goods transportation agency, you don't have relaxation, you have something extra. In addition to the details of the invoice, they should write this extra. So here, it is not like banks and insurance where you have relaxation. Now they are asked to do something more. Something extra. Additionally, what they should contain? The details of consignment note. These are nothing but the details of consignment note. Now, what will be the details of consignment note? The details of the goods transported. See, GTA will give service, but still they should tell what are the goods being transported, what is the gross weight of the goods, who is the consigner and who is the consignee, where is their address, where is the transportation starting and where is the transportation ending, in which vehicle the goods are being transported. This registration number is not the GST registration number. It is the vehicle number of the goods carriage. Vehicle number of the goods carriage. And who will pay GST? Whether it is RCM or FCM. These are extra details. Additional. And if I want to make it simple, they will give invoice with consignment note. In their invoice itself, consignment note details will be there. Goods details, their gross weight, consignee details, from where it is starting, origin, destination details, which vehicle the goods are being transported, and finally who is going to pay GST, FCM, GTA or RCM, the recipient, who is going to pay GST. All these details should be there on GTA's invoice. Extra details, they are asked to do something more. Whereas if you are talking about passenger transportation service, any passenger transportation service, which you will easily observe, they have been given some relaxation. Copy paste of banks, same copy paste of banks, ditto. What is copy paste of banks? Invoice number not required, address of the recipient not required, electronic document signature sufficient. If you get a railway ticket or a airway ticket, do you find any invoice number? PNR will be there. Invoice number not required. You will find your name. You will never find your address. You will find your name on the ticket, but never your address, isn't it? Next time when you take your railway ticket or your air ticket, you will get your name. You might have given your address details, but on the ticket you will find only your name, not the address, and signature. Electronic document, if it's sufficient, that is sufficient. If it is as per Information Technology Act, signature is not so important. E-document is sufficient. Electronic document is sufficient. Are you clear with the sector? So banks, certain relaxation. Now you may have said that if it's the same relaxation for banks, why not merge this along with banks? Because bank have an extra point which passenger transportation sector does not have. Banks and insurance have a concept of consolidated tax invoice or bill of supply, which is not there with passenger transportation service. Now, your movies, cinematographic films, what if it is in multiplex screens? What if it is in normal theaters? If it is in multiplex screen, they have to issue e-ticket only. They don't have an option. Mandatory electronic ticket. Mandatory. And it may not contain recipient's details. Now, look at the wordings carefully. For banks, insurance and passenger transportation sector, it may not contain recipient's address. Name will be there. But here it will not contain recipient's details, means name as well as address won't be there. When you get your ticket, do you find your name? Your details itself are not there, isn't it? Now it's not only focusing on address, it is talking about recipient's details. Both name as well as address need not be there. But they have to give mandatory e-tickets. Mandatory. They don't have an option. And mandatory it should be given for each of the transaction. They don't have the option of consolidated tax invoice, bill of supply at the end of the day. But if it is other screen, if it is normal theatre, then if they want, they can give e-ticket. If at all they don't want, they need not give e-ticket. Optional. E-ticket is optional. Second, they can give separate tax invoice to each of the customer, or if they want, they can go with consolidated tax invoice or bill of supply at the end of the day. At the end of the day. That is for your normal theatres. Are you clear with this understanding? Are you guys clear with this understanding? So that actually completes our understanding of your bill of supply and tax invoice. Yes, contents and all you go through yourself. What all details are required, not at all relevant for exam, just give a glance. What all details are required. Now, talking about your invoice, tax invoice and bill of supply, one important area is left out, which is called as your e-invoice and dynamic QR code. E-invoice and dynamic QR code. I'll make your life simple. This is a very lengthy concept, but we have made it much simplified, a very, very simple way you can understand it. What is e-invoicing and what is dynamic QR code? What is e-invoicing and what is dynamic QR code? Right, before we discuss both of them, let us first understand how e-invoice works. Then life will be very simple, how e-invoice actually works. If you remember, e-invoice will talk to your e-way bill portal as well as your normal portal. So that is how it will work. So whenever you are talking about your e-invoice portal, which is managed by, again, the e-invoice portal is again controlled by your GST network. Only e-way bill portal is managed by your National Informatics Center. National Informatics Center also gets the data from your e-invoice portal. Right. Now talking about the process, what supplier will do? Seller will have to have a system where he can raise e-invoice. Say for example, Tally software or some other software, or an offline utility to prepare a JSON. File. Now he'll do what? He'll upload that e-invoice JSON to invoice registration portal as per schema, e-invoice schema, INV1. See what is e-invoice schema? Predefined details should be given mandatorily. You use any software, but these details should be there. That is called as schema. You use any software or directly you enter, these details should be there. Right. So seller either directly using the JSON file or through a software which can understand the details required for e-invoice schema and give it to it, will give the data to whom? Will give the data to invoice registration portal, which means to e-invoice portal. What e-invoice portal will do? It will validate the data, generate something called as invoice registration number, IRN. IRN is a proof that e-invoice is generated. Then it will send the invoice to the normal GST portal. Now what normal GST portal will do? Normal GST portal will first rule out the existence that same IRN is already there. So I mean, you're talking about crores of businessmen will be generating crores and crores of e-invoice at the same point of time, isn't it? So that should be a check whether the same IRN is not assigned to any other transaction. So normal portal will check whether the same IRN is assigned or not. It will check that. And if at all it is not there, it will save the invoice in the GST portal, which will be further used for appearing in suppliers GSTR1 and recipients GSTR2A. Right. Now, once that is verified, full proof that okay, there's no duplication, then what will happen? Then it will add a QR code. It will come back to your invoice registration portal. After validating, it will add a QR code, it will sign the e-invoice, the JSON file. The signature will be done, not your signature. The government department signature will be there. Signature will be there that okay, this e-invoice is perfect, and it will push the data to your e-waybill portal. So your part A of e-waybill will be filled. If at all you have given your vehicle number, part B will also be filled, and e-waybill also automatically will be generated. Clear? Finally, what you will get is a JSON file with IRN, e-invoice, which means you have got your e-invoice with IRN. This IRN is a 64-digit number, so you will not get the IRN, you will get a dynamic QR code which is embedding IRN in it. The moment you scan that code, you will get the invoice registration number. Invoice registration number, and if at all you have given the vehicle number, part A of e-waybill is filled. If at all you have given the vehicle number, e-waybill also will be generated automatically. E-invoice will all surely come. Whether e-waybill will come or not depends on whether you have given the vehicle number or not. If you have not given the vehicle number, don't worry. Part A is automatically filled. If you have given the vehicle number, automatic e-waybill also will come out. Right? Then it will have a QR code given to the buyer. Now the invoice which is given to the buyer is with QR code. This QR code will embed within itself the invoice registration number. So this invoice should go to the buyer, not your normal invoice. Invoice with the QR code, that QR code, the moment you scan it, you will get the invoice registration number. Invoice registration number will be handed over to the buyer, and your GSTR1 is also uploaded. That we have already discussed in the flow. So this is how your e-invoice portal talks to normal GST portal, comes back to e-invoice portal, talks to e-waybill portal, and three portals are talking to each other. There are three portals in total, and all the three portals are talking to each other. And in the entire flow, obviously, what buyer will get? Buyer can easily view that the supplier has generated e-invoice. He'll get that in GSTR2A. He'll also get the information that GSTR1 is not filed, but e-invoice is generated. He'll also get that information that e-invoice is generated, but GSTR1 is not yet filed. That information also will be there. This ensures that validity. He is rest assured that invoice is finally raised. I will not have any difficulty. The person who has generated e-invoice generally will also file his GSTR1. He is rest assured. He is rest assured about his credit. So this is how your entire communication will happen. So now if you see what is e-invoice schema, we have understood that what is pre-invoice schema. Certain details are mandated whether you use directly or different software. These details are required. The moment you fill those details, it is called as e-invoice schema. How many portals are there? We have already discussed there are 10 portals of e-invoice, and you don't communicate to all the 10 portals. You can use only the main portal www.einvoice1.gst.gov.in, and the other 9 portals are generally used by the GST Suvidha providers. When you are generating e-invoice using software, they will be using them from the backend. And invoice registration number we have discussed is a 64 alphanumeric number, 64 digits, which will be embedded in form of QR code. The moment you scan the QR code, you will get that 64 digits invoice registration number. Now the moment you understand this, differentiating this is pretty simple. Very basic and simple. Very basic and very simple. Right. Now first understand that what is the purpose of e-invoice? To avoid bill trading. To avoid bill trading. Tax evasion. The main purpose for introducing e-invoice where government were having a lot of challenges, where lot of bill traders were cheating the government. In the name of the government, they were giving the credit to the customer, but they were not at all paying the tax, they were running away. So that was the basic objective of bringing e-invoice. And what is this e-payment dynamic QR code? One is e-invoice QR code, which is rule 48 sub rule 4, read along with notification number 13/2020. One is e-payment dynamic QR code, which is rule 46, read along with notification 14/2020. E-invoice QR code objective was to prevent tax evasion. Objective was to prevent tax evasion. You will find objective given somewhere. Objective was to prevent tax evasion. Tax, it is that given in the previous page. Tax evasion. What is the objective of your e-payment dynamic QR code? Objective is not to prevent tax evasion. Objective is to promote digital payment. To promote digital payment. What is the basic objective of e-invoice QR code? To prevent tax evasion. Prima facie objective of e-payment dynamic QR code? To promote digital payment. To promote digital payment. Right. Now, when you talk about your e-invoice QR code, the provisions are Rule 48 sub rule 4, which will tell that you should have a QR code which is embedding within itself invoice registration number, and that is technically called as e-invoice dynamic QR code. Whereas your e-payment dynamic QR code is to promote digital payment, to give an option to the recipient to make electronic payment. It is to give an option to the recipient to make electronic payment. It is to promote digital payments. Now let us talk about certain other aspects. Point by point we'll discuss. Examples are given. We'll try to complete the examples here itself. Now, when you talk about your e-invoice dynamic QR code, on what all details they are required? They are required on your tax invoice, debit note and credit note. I am going with the logical flow. First, they are required in what all documents? Tax invoice, debit note and credit note. Whereas your e-payment dynamic QR code is required in tax invoice and bill of supply. Tax invoice and bill of supply. E-invoice dynamic QR code, tax invoice, also the debit note and credit note that supplier is giving later on for change in value and tax. Whereas here it is only in tax invoice and bill of supply. Tax invoice and bill of supply. Now, your e-invoice dynamic QR code is required for B2B transaction. Your customer should be registered and exports. Whereas your e-payment dynamic QR code is required for B2C supplies minus exports. Please write that minus exports. Circular has clarified it, because you cannot have a foreign party coming here and making digital payment. Coming here in India, scanning your QR code and making digital payment. So that is too much. So it is other than exports. E-invoice dynamic QR code is B2B plus exports. Exports are always B2C, but plus exports. And e-payment dynamic QR code is B2C. Your customers are unregistered. And you are not talking about exports, because for exports you have e-invoice dynamic QR code. Right. Now talking about the main criteria. When it is actually required. When your aggregate turnover is more than 10 crores in any of the preceding financial year right from 17-18. Not in previous financial year. In any of the preceding financial year right from 17-18 when GST started. So, supposing you are sitting in financial year 23-24. 23-24. What all financial years you will see? 17-18, 18-19, 19-20, 20-21, 21-22, 22-23. All these 6 financial years you will see, because you are sitting in 23-24. All these 6 financial years you will see, and you will see whether in any single financial year you crossed 10 crores. You might have crossed 10 crores in 17-18. Thereafter your business is very less. Even then in 23-24 you have to raise e-invoice dynamic QR code. You are getting that point? Right from financial year 17-18, your aggregate turnover in any of the financial year, in any, not all, in any of the financial year crossed 10 crores. Whereas e-payment dynamic QR code is required where your aggregate turnover crossed 500 crores in any of the preceding financial year right from start. Same logic. But the turnover now amount is 500 crores. Turnover amount is now 500 crores. 500 crores. Clear? Okay, let me make it simple. If the turnover crosses, then you have to raise e-invoice dynamic QR code or e-payment dynamic QR code. 10 crores and here it is 500 crores. E-invoice dynamic QR code is for B2B and exports on tax invoice, credit note, debit note. E-payment dynamic QR code is only on B2C transaction other than exports, and it is only on tax invoice and bill of supply. Now, there are certain relaxations. There are certain. Now the relaxations are what? Common relaxations. Banking sector, insurance sector, passenger transportation sector, GTA sector, multiplex screen. They are all special sector where we are seeing special points here and there. Again, they are all coming repeated here, isn't it? Banks, insurance, GTA, passenger transportation services, multiplex screens. Banks, insurance, GTA, passenger transportation service, multiplex screens. They need not raise e-invoice dynamic QR code. They need not raise e-payment dynamic QR. It's not required. Even if their aggregate turnover is crossing the limit. Even if their aggregate turnover is crossing the limit. Who are all they? It is banks, insurance, GTA, passenger transportation service and multiplex screen. For them, you don't have e-invoice, you don't have e-invoice and e-payment dynamic QR code. Both are not applicable. Both are, even if your aggregate turnover is crossing a particular limit. Clear? Now you have special cases here. Now what is the second special case here is, we are talking about your SEZ unit. They don't require e-invoice. E-payment also, e-payment, there's no relaxation, which means technically means they require it. Technically means it is required, but understand that SEZ unit will generally not have B2C transactions. Either it will be B2B or exports. But okay, technically speaking, e-payment dynamic QR code is required if the turnover is crossing 500 crores in any of the preceding financial year right from 17-18. What if it is SEZ developer? There is SEZ unit and there is SEZ developer. For SEZ developer, there is no relaxation. Both are applicable. The relaxation is only for SEZ unit. What if I am talking about government departments? Government, local authority, government departments. They have relaxation of not generating e-invoice dynamic QR code, but that relaxation is not there for e-payment dynamic QR code. See, when I put a cross mark, it means relaxation, not required. It means there is a relaxation, it is not required. And the last category which is there is, if you are talking about OIDARS services. OIDARS services from outside India. There is a relaxation from e-payment dynamic QR code, and you don't require that relaxation for e-invoicing, isn't it? You don't require that relaxation for e-invoicing. Why? OIDRS from outside India, only when it is given to B2C, non-business entity, it is taxable under FCM. They have to pay GST, but they do not give e-payment dynamic QR code. If at all it is given to a business entity, they are not bothered. Business entity will pay under RCM. So here I am not putting tick mark, I am just telling, not automatically understood that they did not wanted relaxation from e-invoice, they wanted relaxation from e-payment, which they have got. Are you guys clear with this understanding? Banks, insurance, GTA, passenger transportation service, multiplex, relaxation from both. SEZ unit and government department, relaxation only from e-invoice dynamic QR code. OIDRS wanted relaxation only from e-payment, and they have got the relaxation. SEZ developer I have given you to make you understand that relaxation is only for SEZ unit, not for SEZ developer. Are we clear with this understanding? Are you guys clear with this understanding? Right. Now let us understand what will happen if at all you are not complying with this. If a supplier is not raising e-invoice, recipient will not have a valid document and recipient cannot take the credit. It comes in a practical question also. Recipient cannot take the credit because it is not a valid invoice. If supplier is not raising e-invoice, then recipient whatever invoice he is having is not a valid document. It's not a valid document. Recipient cannot take the credit. And supplier will have a penalty under section 122 for supplying without invoice. Because if you are not complying with the invoice, it is as good as you have not given invoice. So supplier will have a penalty under section 122 for supplying without invoice and section 129 penalty for improper transportation. Squad officer will stop the vehicle and he will tell that okay, give your document. Base document is tax invoice, supporting document is receivable. But officer will tell that this base document is not a valid document because it did not generate invoice. 129 penalty will also be there. So, two penalties for supplier. One 122 penalty for supplying without invoice. One 129 penalty if squad officer stops during transportation, moving the goods without proper invoice. And recipient will not be able to take the credit. So, one from the angle of recipient. But if at all you are not complying with e-payment dynamic QR code, there will be a general penalty as per section 125. CGST maximum 25,000, SCST maximum 25,000. The normal penalty will be there as per section 125. That is the residuary provision penalty. Residuary penalty provision is section 125. Now, what is the content of QR code? Now, the last 2 points which are left out are self-explanatory. For e-invoice, you have to go to e-invoice portal and generate e-invoice, isn't it? Whereas for your e-payment dynamic QR code, you are not going to any portal. You have to have your own software for creating a QR code. E-invoice QR code is given by GST portal, whereas e-payment dynamic QR code you are generating yourself by using some software. Clear? And this e-invoice QR code will have IRN, invoice registration number, embedded in it. Whereas this e-payment dynamic QR code will have what details? Will have the e-payment details. If the recipient is scanning that e-payment dynamic QR code, it will connect to it will transfer the payment to the bank account of the supplier. It will transfer the payment to the bank account of the, obviously you have to tell yes, you have to proceed and tell yes. You are seeing all QR code in all the shops nowadays. Even a street vendor will have a QR code, but that is not dynamic QR code. That is static QR code. If you scan that code, bank account is connected that of supplier, but you have to enter the value. You have to enter the value and proceed. But whereas what they are expecting here is dynamic QR code, which means for that transaction, it is there recording in that QR code. So that QR code is only for that transaction. That QR code is only for that transaction. So when you are having a dynamic QR code, doesn't mean so 500 crores, why this 500 crores is there, even a 500 rupees street vendor is having QR code. No, that is static QR code. Dynamic QR code is a QR code. For that transaction, they will give a QR code. For that particular transaction, each of the transactions there will be a QR code. So the moment I scan that QR code, I need not even enter the value. Value will be pre-filled. I have to just proceed yes. I have to just go and proceed with yes. That is dynamic QR code. That is dynamic QR code. You are understanding that particular point? And finally, if at all, there is a relaxation which is there for your e-payment dynamic QR code, which is easily understandable if you understand this particular point. If at all recipient has already made the payment by way of cash, advance payment is made, already payment is made by way of cash, advance payment is made, then rather than giving QR code on the invoice, supplier can write payment reference number, payment details he can mention. See, 2 points I am telling. This is explained detailed in circular and making it very simple. If advance payment is already received by the supplier, should he have dynamic QR code on the invoice? Not required. Why? Payment is already received. I need just write payment reference number. Second, if payment is yet to be made, should I show dynamic QR code to the customer? Yes, I will show on my system this dynamic QR code. He tells that no, I don't want to make digital payment, I'll take the payment by cash. So on my system, there is a dynamic QR code which is generated, but when he's making the payment by way of cash, I can write payment reference number in the narration. So when I'm taking the printout, it may have the dynamic QR code still there, or it may just have the payment details. It may just have the payment, but yes, if advance payment is not made, I should have shown the customer the option of digital payment. So I should turn my system there and show to my customer that kindly make digital payment. He may make, he may not make, that is his wish. But I should give that option. I should give that option. That is everything about your e-invoice and e-payment dynamic QR code. E-invoice and e-payment dynamic QR code. Are we clear with this understanding? Yes, friends, one change. Please understand that when you're talking about your e-invoice limit and e-payment QR code, e-invoice QR code and your e-payment QR code. For e-invoice QR code, now the limit for which you have to take your e-invoice is not 10 crores, it is 5 crores. It is 5 crores. For your e-payment QR code, the limit is still 500 crores. Only and only for your e-invoice QR code, the limit is not 5 crores, which means in any of the preceding financial year, any of the preceding financial year, right from 17-18, if your aggregate turnover is more than 5 crores, you have to go for e-invoice QR code. And if in any of the preceding financial year, right, starting from 17-18, 18, 19, 20, any one preceding financial year, if your aggregate turnover is more than 500 crores, you have to go with e-payment QR code. So for your e-invoice QR code, the aggregate turnover limit is now 5 crores and not 10 crores. It is now 5 crores. Now, talking about your other documents, receipt voucher and refund voucher. Very basic, very simple. First, please understand that this receipt voucher and refund voucher is more relevant for supplier of service. Supplier of service, because only in supplier of service advances will be taxed. Advances will be taxed. When are you going to give receipt voucher? When you receive the advance payment. There will be a receipt voucher with GST. Invoice will not be given. Invoice will be given later. When there is a question of refund voucher, when you have given a receipt voucher, but supply is not at all mailed because contract is cancelled. Contract is cancelled. So when supply is not made, you have not at all raised tax invoice. So you have got the advance, you have raised receipt voucher, supply was not made, tax invoice was not given. Now you are refunding the entire amount. You are refunding the entire amount. Then you are going to give refund voucher at the time of refund of advance receipt. See, receipt voucher only one condition, receipt of advance payment. Refund voucher, condition number 1, there is a receipt voucher issued. Condition number 2, no supply was made, no invoice was raised. Condition number 3, advance receipt is fully given back. Only then you can give refund voucher. Only then you can give refund voucher. See, normally understand that receipt voucher will not be followed by refund voucher. Receipt voucher will be followed by tax invoice. If I get an advance of 1 lakh plus GST from you, my total value is 10 lakhs plus GST. I get an advance for 1 lakh plus GST from you in April. Supply is made in December. So in April, I will give a receipt voucher of 1 lakh plus GST. I'll pay GST on 1 lakh in April. In December, I'll give tax invoice of for what value? Not balance 9 lakhs, entire 10 lakhs. Not balance 9 lakhs, entire 10 lakhs. But I'll not pay GST on entire 10 lakhs. When I see your return, you'll find that invoice will be 10 lakhs plus GST. There will be a column called as adjustment of advance. You'll be adjusting you already paid GST on 1 lakh in April. You'll be adjusting that. So in April, there will be receipt voucher for 1 lakh plus GST. You'll pay GST on 1 lakh. In December, there will be tax invoice for 10 lakhs plus GST, not differential 9 lakhs. It will be for, but you will pay GST only on 9 lakhs. How? You will raise invoice for 10 lakhs plus GST. There will be a column called as adjustment of advance, where you will put 1 lakh on which you have already paid GST. Finally, you will pay GST only on the balance 9 lakhs. But invoice will not be for 9 lakhs. Invoice will be for 9 lakhs. What happens in case of refund voucher? I got an advance of 1 lakh plus GST. Supply was not made, invoice was not given. I have refunded the advance. Now I am giving refund voucher in December. So I would have paid tax in 1 lakh plus GST in April. Now in December I am repaying that amount. So then refund voucher will come in the month of December. So exceptional case refund voucher will come. Normal case it will not come. Normal case receipt voucher is followed by tax invoice. Because your advance is followed by finally supply being given. Exceptional case receipt voucher is followed by refund voucher. Now let us understand this, and you will understand whether giving receipt voucher is entertainable or not entertainable, whether you should give receipt voucher or not. Now before we see this example, understand that when I am receiving the advance, if I know the rate, if I know the product that I am going to give in December, I will put that rate. I am getting advance in April, I am going to supply in December. I know what product I am going to give. If I am going to give a product having 5% rate, in April I will collect how much tax? 5% on 1 lakh. If I am going to give a product which is having 28% as the rate, I will collect on 1 lakh 28%. But I am receiving advance today from one of my customer, and supply will happen in December. Advance in April, supply in December. And I am dealing with multiple items. I am dealing with multiple items. I don't know which item you want. I am having an item having 5%, 18%, etc. etc. Which rate should I put? If I am not sure with the rate, I have to go with 18%. The rate of tax is not known, I have to go with 18%. If I know the tax rate, go with that tax rate. If I don't know the tax rate at the time of receipt of advance, I have to go with 18%. I have to go with 18%. I'll give another view of showing it. Same concept but another point. I'm having a customer who's having branch in Tamil Nadu as well as Karnataka. I'm there in Tamil Nadu. My customer is having a branch in Tamil Nadu and Karnataka. That customer is giving me advance. If he is selling that, he is giving that advance for Tamil Nadu branch. I'll put, along with that advance of 1 lakh, I'll put CGST and CST. If he is telling that advance is for Karnataka branch, along with that 1 lakh advance, I'll put GST as IGST. But if that customer is not telling me anything, whether that advance payment is for Tamil Nadu branch or for Karnataka branch, then what tax I'll put? IGST. If I am very sure of tax rate, put that tax rate. If I am not sure, go with 18%. If I am very clear of tax type, whether CGST, AGST or IGST, go with that tax type. If I am not sure, go with IGST. Know the rate, go with that rate. If not sure, put 18%. Know the tax type, go with that tax type. Not sure, go with IGST. Go with IGST. Are you guys clear with this understanding? This is for receipt voucher. This is for receipt voucher. Now talking about the circulars and the understanding of what is happening. Supposing I get an advance. But the contract is cancelled before the services are given. I get an advance. Contract is cancelled, which means I am refunding that advance. Now understand that when I get that advance, what would I have done? I would have raised receipt voucher and I would have paid GST. I'll take the same example. I got that advance in April. I got that advance in April. What I did? In April, I raised receipt voucher and I paid GST on 1 lakh. Now contract is cancelled. What is the document that I should give? I am going to give refund voucher. But the sad part of the story is I am going to give this refund voucher in December. Because I am giving the refund in December, I cannot adjust it in my return. I have to apply for refund. Because I got the advance of 1 lakh plus GST, I paid GST to the government. And now I have refunded the entire 1 lakh plus GST to the customer. If I see the entire flow, I got 1 lakh plus GST from the customer, I repaid 1 lakh plus GST back to the customer. But in this entire transaction, I have already paid GST to the government. Normally, what should have happened? They should have said that I can adjust this amount in my return itself. So normally in December month they should have allowed it to adjust in my return itself. But now what they are telling? You apply refund. This is given by circular, which assessee can challenge. But circular is telling this answer. You have to apply as refund. What would have been better option? Better option would have been, though I got an advance in April, I should not have gone with receipt voucher. I should have gone with tax invoice. I would have paid GST on 1 lakh. I should have gone with tax invoice. And subsequently, when the contract is cancelled and I am giving the refund, I should have given credit note. The beauty of that is, I would have adjusted that in my return itself. If I want, I can adjust in my returns. If I want, I can apply the refund. Obviously, no one will apply for refund, isn't it? What they'll do? They'll adjust in the return. They may not even intimate anyone. They'll adjust in the return itself. So, in the month of December, along with my December month's liability, I'll adjust it. I'll reverse the tax. I'll do it on my own, in my return itself. So, I need not even apply for refund. So, what is better? Receipt voucher is better for advance or invoice is better for advance? Always invoice is better for advance. Always go with tax invoice. Tax invoice for your even if it is advance, better is to go with tax invoice. Why? Receipt voucher, if it is cancelled, it will be followed by refund voucher. And refund voucher, when you give, you will not be able to adjust that liability in your return. You will not be able to reverse that tax that you have paid in your return. You have to apply for refund. Whereas if you go with tax invoice, you have paid tax on advances at the time of cancellation of contract, and when I am giving the refund, you will give credit note. You will give credit note, where you can reverse the tax on your own in your return itself. On your own. You need not stand and apply for refund. Now you might wonder, sir, if at all I am going with this option, what if my supply is not cancelled, it is happening? What will be I will be doing for the balance amount? Give a debit note. See, this cancellation is a rare case. If I don't tell this point, you will be having a doubt. Tax invoice followed by receipt of advance followed by cancellation is rare. What is the normal case? You receive advance and balance payment, you will receive it later. So, if that is the case, your tax invoice initially will be for 1 lakh plus GST. In December, you will give debit note. Debit note is otherwise called a supplementary invoice for balance 9 lakhs. Now, it will not be for entire 10 lakhs. For balance 9 lakhs plus GST. So, always you have an option. Beautiful scenarios. You could have always selected your tax invoice. Now, this is again discussed in your debit note, credit note, and already we have discussed this. So, nothing special. So, if this is not about advance anymore, this is a separate context. If the circular also talks about goods are returned back. So, when the goods were sold, what was the document? When the goods are returned back, what is the document? Credit note. This is another part of the same circular explaining this. So, this has got nothing to do with your advances. Advances, we are done with your advances concept. Now moving on to the next documentation, which is all about your self-invoice and payment voucher. Actually nothing is left out. In the bird's eye view itself, we have discussed both the concept. When self-invoice will come and when payment voucher will come. Self-invoice has got two conditions. Condition number one, RCM. Condition number one is RCM. Condition number two, supplier is unregistered. Because if supplier is registered, he will give tax invoice. He will not pay GST, but he will give tax invoice. He will mention that recipient will pay GST under RCM. Rather, there is nothing called a self-invoice. It is nothing but tax invoice raised by a recipient. Clear? But payment voucher, what is the only condition? If it is a case of RCM, at the time of making the payment, recipient will raise payment voucher, whether the supplier is registered or unregistered. Whether the supplier is registered or unregistered. That's everything about your self-invoice and your payment voucher. This was actually discussed or covered in your bird's eye view itself. Now, talking about your revised tax invoice. Revised tax invoice. Clearly, we have discussed that revised tax invoice will come in two cases. At the time of registration, birth, and rebirth. At the time of revocation of suspension. At the time of revocation of suspension. Now, please understand that why this revised tax invoice is there. Now, first there is a condition. If at all you want to raise revised tax invoice, you should have applied for registration within 30 days. 30 days is very crucial. You have to apply for registration within 30 days from the date you become liable. Right? And during all the time, right from the day you are liable for registration till the date you get the registration, you would have made your supplies, but without GST. The moment you get your registration certificate, within 1 month from the date of getting the registration certificate, grant of registration, you can convert your accounting invoice to GST invoice. To all the customers, you will be giving GST invoice and collecting that GST portion, so that you will get the GST amount and they also will get the revised tax invoice. They also can claim input tax credit. Are you clear with this understanding? But you need to understand, you have to apply for registration within 30 days. Which means, supposing my business started on 1st June. I crossed that 20 lakhs limit on 10th September. I applied for registration on 25th September. Did I do my work within 30 days? The moment I do my work within 30 days, everything is good for me. I got my registration on 2nd of October. Now understand that within 1 month, now it is not 30 days by the way, now it is within 1 month. 30 days is different from 1 month. 30 days is different from 1 month. Supposing you are standing on 25th of July. If I tell 30 days from 25th of July, it will be 24th of August. Because July has got 31 days. If I tell 1 month, it will be 25th of August. So 30 days is different from 1 month. 1 month you will keep on jumping. You will not see what is the end of the net. 1 month. Is that clear? So 30 days is different from 1 month. Within 1 month, you can convert your accounting invoice to revised tax invoice. Now for all your supplies between 10th of September till you got your registration, you will be filing something called as first return. You have to pay output tax from 10th September. You can claim input tax credit from 10th September. Also, we have discussed in your ITC chapter that you can claim your credit on your stock as on 9th of September. We are now merging everything. ITC chapter, return filing chapter, registration chapter, documentation chapter. 4. Registration chapter. The first return chapter. ITC chapter, you can take ITC on your stock. Now documentation chapter, revised tax invoice. We are merging your 4 chapters. 4. Now what if I tell that you are a lazy person? You started your business on 1st of June. You crossed 20 lakhs on 10th of September, but you applied on 15th of October. You did not do your work within 30 days. Can you give revised tax invoice? You cannot give revised tax invoice. You cannot give revised tax invoice. Can you take credit on the stock? No. You cannot take credit on the stock. Now what will happen in your first return? In your first return you will pay output tax right starting from 10th September to your October month, full October, not 20th October, even till 31st of October. But you will claim input tax credit only from 20th October onwards. In the previous example, my output tax will be from 10th September. My input tax credit is also from 10th September. Also, I can claim input tax credit on my stock. Are you clear with this understanding? Merging of 4 chapters together. You are merging the 4 chapters together. That is the first part. Second part is quite simple. No suspense. Very simple. Your registration is suspended. You have made some supplies during that suspension. Now your suspension is revoked. Within 1 month of revocation, I have to convert my accounting invoice to revised tax invoice. So there are no ifs and buts. So my registration got suspended on 10th of September. It got revoked on 2nd of October. During this time I was making supplies but without GST. Now within 1 month, I have to give revised tax invoice. And for this time, from 10th of September to entire October, not only 2nd October, entire October month, 31st of October, I will be filing for group of months 1 return. First return. Again, first return will come into picture. Are you clear with this understanding? Now the second scenario is, what if my registration is suspended and it is cancelled? When it is suspended and is cancelled, there is no question of any first return, there is no question of any revised tax invoice. Nothing. If my suspension is there and followed by cancellation, we are not going to talk about any of my first return, we are not going to talk about my revised tax invoice. So as far as revocation of suspension is there, it is pretty simple. You have a lot of ifs and buts when you are talking about your new registration. No ifs and buts when you are talking about your revocation of suspension. Are you guys clear with this understanding? Right. Now when you are talking about your revised tax invoice, can you give consolidated tax invoices? Consolidated revised tax invoices. Please understand that if it is B2B case, your recipient is registered. Whether it is interstate or intrastate, each of the accounting invoice has to be converted to revised tax invoice because they want credit. Each of the accounting invoice has to be converted to revised tax invoice. If it is B2C supplies, and if it is interstate supply, the value is up to 2.5 lakhs. We have seen in return filing chapter also. Then for all such transactions of interstate where the value is up to 2.5 lakhs, I can raise one consolidated revised tax invoice. The value is more than 2.5 lakhs. It is consolidated revised tax invoice for that recipient, which means separate tax invoice, separate revised tax invoice, separate revised tax invoice. And if it is B2C, within the state, intra-state, then I can go with consolidated revised tax invoice. It is in match with your return filing chapter. B2B, each of the accounting invoice has to be converted to single revised tax invoice. B2C, intra-state, you can go with consolidated revised tax invoice. B2C, interstate, for all those transactions where the value is up to 2.5 lakhs, consolidated tax invoice, but for that particular state, state-wise. And if it is more than 2.5 lakhs, separate revised tax invoice has to be given to those recipients. And that is all about that is everything about your revised tax invoice. And by the way, friends, debit note and credit note, whatever points are given here, we'll just go through it again. Everything we have discussed in your valuation chapter. We'll just go through it once again. When you are going to give credit note, you are going to give credit note for decrease in value or decrease in tax, or goods are being returned, or goods or services are found to be deficient. 4. Decrease in value, decrease in tax, supply return, deficiency. Deficiency can be in quality as well as quantity. Deficiency can be in quality as well as in quantity. 4 cases where you give credit note. Debit note you give only in 2 cases. Increase in value, increase in tax. Increase in value or increase in tax. Giving credit note is mandatory or optional? Credit note will reverse output tax or increase output tax? Credit note. Credit note will reverse output tax or increase output tax for the government? Reverse. So giving credit note is optional, whereas debit note increases output tax or reverses output tax. So giving debit note is mandatory. When credit note is reversing output tax, is it conditional or unconditional? Conditional. Main condition is recipient should reverse proportionate input tax credit. Supplier, you are reversing your output tax. Recipient should reverse proportionate input tax credit. Whereas, do you find any extra conditions for debit note? No. Debit note is otherwise called as? That is not a condition, but there is no extra condition. There is no extra condition. Now, giving credit note, government does not like it. So that's the last date. What is the last date? The last date is similar to that we have seen in your ITC chapter and your written chapter. ITC chapter, last date for taking credit, written filing chapter, last date for rectification. Same. 30th November of next financial year or actual date of filing of return of that financial year, whichever is earlier. That's the last date. 30th November of next financial year. You have to raise credit note on or before 30th November of next financial year or actual date of filing of annual return of that financial year, whichever is earlier. Debit note, will it have any time? No. You can raise debit note after 2 years, 5 years. The later you raise debit note, the more you will pay interest. The more you will pay because you are paying tax late. So the more you are going to pay interest. Are we clear with this understanding? All these points we have already covered in your valuation chapter. Now one more point which is given here, we have already covered that. Please understand that when you talk about your debit note or credit note, should I link it with invoice? Yes, but should I link it with each? Should I mandatorily link with a particular invoice? No. That is now ruled out. I have made hundreds of supplies to a customer. Now for all those 100 supplies, I am giving one discount. That is a single discount. Should I give 100 credit note? There can be a single credit note. This can be a single credit note for multiple supplies during a financial year. This credit note is connected to hundreds of tax invoice in that financial year. Earlier, credit note needs to be given for each of the invoice. If I am giving discount for hundreds of invoices, I have to give 100 of credit note. Now they have made it simple. I can give one credit note for all those invoices in that financial year. In that financial year. The same is true with debit note. The same is true with your debit note. Are you guys clear with this understanding? Are you guys clear with this understanding? Right, so when you talk about your credit note and debit note, things are pretty simple. Right, there is an example of Cipla and Apollo, which is a very high level example, but I'll make it pretty simple for you, very simple for you. Right, Cipla is giving medicines to Apollo. Apollo sees that the medicines are expired. Apollo sees that the medicines are expired. They are returning back the medicines. Cipla takes those medicines and Cipla destroys it. So Cipla first purchased raw materials, took input tax credit of say 9 rupees on those raw materials, manufactured medicines, paid output tax of say 18 rupees on those medicines, and Apollo took input tax credit of 18 rupees on those medicines. So there was purchase, then manufacturing and sales, then return back, and then finally destroyed. What if? There are three answers that are given. What if Cipla is doing within the time limit? There is a time limit for credit note, right? So this is sale is having a document called as tax invoice. Return back will have a document called as. So when it is written back, what is the document that is that? Supposing now we are talking about the options, available options. Supposing this return back is happening within the time limit, 30th November of next financial year, or actual date of filing of annual return of that financial year. Then what is the wise option? Cipla should give credit note to Apollo. In this entire scenario, what will happen? Cipla now will reverse output tax of 18, Apollo will reverse input tax credit of 18, Cipla in addition to it will reverse input tax credit of 9 because it is destroying the medicines. Now if you see this particular case, first case, what is happening? Let us understand Cipla's story, then Apollo's story. Cipla first took input tax credit 9 rupees, then paid output tax 18 rupees. Now it is reversing output tax 18 rupees. As it is destroying the medicines, it is reversing input tax credit 9. Apollo took input tax credit of 18. Now it is reversing input tax credit of 18. Clear? Now what if this return back is not happening within time, but Apollo is cooperative. Apollo is ready to give tax invoice to Cipla. Rather than treating it as return, it is treating it as new sales. New possible. I sold you, now you are selling me. I am not showing it as sales return, you are not showing it as purchase return. You are showing it as sales, I am showing it as purchase. What will happen? Now, Apollo will pay output tax of 18. Cipla will take input tax credit of 18. Now what is happening in this entire story? Let us again analyze the story of Cipla and Apollo in this case. Cipla initially took input tax credit of 9 and it paid output tax of 18. Now it is taking input tax credit of 18. When it is reversing ITC, it has to reverse input tax credit of 18 because now its recent input tax credit is 18, not 9. So there is an excess reversal of 9 rupees which is in loss for Cipla. Clear? So here lies the difference. For Apollo, things are very simple. Apollo first took input tax credit of 18. Now it is paying output tax of 18. Clear? Third and the worst scenario. Return back is not happening in time. And Apollo is not ready to give tax invoice. So now Cipla is just giving financial credit note without GST. So there is no reversal of output tax. But anyways, Apollo has to reverse input tax credit of 18 because the goods are going out. Cipla cannot reverse output tax, but Apollo has to reverse input tax credit because the goods are not used now in their business. In addition to it, Cipla has to reverse input tax credit of 9 because it is destroying the medicines. Now let us see Cipla history and Apollo history. For Apollo, things were very simple. It took input tax credit of 18. It reversed input tax credit of 18. For Cipla, things are very, very difficult. It initially took input tax credit of rupees 9, paid output tax of 18. It was not in a position to reverse output tax. So output tax reversal is now 0. But still it has to reverse input tax credit of 9 rupees because it is destroying it. Now where lies the difference? It is not in a position to reverse output tax of 18. So if you go and see the history of Cipla in the first case, net effect was 0. Took credit of 9, reverse credit of 9, paid output tax 18, reverse output tax 18. In the second case, there was an excess loss of 9 rupees. Took credit of 9 but reversed 18. Paid output tax of 18, then took input tax credit of 18, that nullifies itself. But here there is a loss of 18 rupees. Took credit of 9, reverse credit of 9, that is okay. But paid output tax 18, but was not in a position to reverse any output tax. So here there is an excess loss of 9 rupees, here there is an excess loss of 18 rupees. So what is best? The best answer is option 1. But that is possible only when things are happening within time. If it is not happening within time, better Cipla is convincing Apollo to give a tax invoice. That is not happening. Cipla does not have any option. It has to go for the third case. The moment you understand this lengthy, complicated circular, things are very simple by the way, but the moment you understand this, you are thorough with whatever is there in your credit note and debit note. So that is all given in your debit note and credit note. And lastly, we are talking about your delivery challan, and we have discussed number of times when is delivery challan issued. If you see delivery challan, you will find 4 reasons for raising delivery challan. You will basically find 4 reasons for raising your delivery challan. Reason number 1, where there is supply of liquid gas, where the quantity at the time of removal from the place of business is not known. There is supply but you are not sure of the quantity. There is supply but you are not sure of the quantity. When there is supply, you are not sure of the quantity, you will give delivery challan only. Right? Or when you are giving the goods to job work, is there any supply? No. So delivery challan. Or when there is transportation of goods for any reason other than main point, when there is no supply, there is delivery challan or any other notified case For the first point, see, B and C are very simple. Supply to job worker, there is no supply, delivery challan. C, no supply, delivery challan. Very simple. For point number A, you can take this first circular and understand it. The circular tells in a very simple way, I am supplying certain petroleum products through a dedicated pipeline. I am not even asking my customers how they want. My transaction happens this way. Early morning, I will send 100 liters to you. I know you want something, but I don't know how much you want. By the day end, you will tell that you want only 15 units, 15 liters today. You will return back 85 liters. What document will flow? When I send you 100 liters, that is surely you are going to take something, but I don't know how much quantity. So what I'll give? For 100 units, what I'll give? Delivery challan. When you accept 15 units, what I'll give? Tax invoice. The goods are already there with you. I'll give tax invoice. When you return back 85 units, what you will give? Delivery challan. That's it. So point number A and this circular will clearly tell you what is happening. Now, to understand point D, other notified cases, you can take this particular case. This we have discussed in your ITC chapter very clearly. I'll tell the example you remember. I am giving one big machinery, but the transportation is in 10 lorries. I am selling you one machinery, but the transportation happens in installment. The transportation happens in lots or installment. So you are talking about semi knockdown goods or complete knockdown goods or lots or installment. Right. Before I remove the first lot, I have to raise entire invoice. If you remember, my first lot was going in April, last lot is in say January. I'll pay entire output tax in April, but recipient can take full input tax credit only in January. This we already discussed. Yes, in ITC chapter. Recipient can take the credit only on the receipt of last lot. But I have raised already invoice of say the entire machinery is of 10 crores. But each lorry contains 1 crore. Each month I am sending certain parts of machinery which is of 1 crore. Now, what documents I will send along with that lorry? There will be a copy of, first understand that before removing any lot, I will raise invoice for entire 10 crores. I will pay entire GST of 10 crores in April itself. Now, when the first lot is going in April, what all documents will go? See, there is already an invoice which is raised. That invoice is of what? That invoice is of 10 crore plus GST. But that lorry contains what? That lorry contains only 1 crore goods. So, if at all officer stops, officer will harass me. So, I will send a copy of invoice and I will send delivery challan for 1 crore plus GST. And even bill will be for that delivery challan, not for that invoice. So, for every lot, there will be delivery challan with the reference number of tax invoice and e-way bill corresponding to delivery challan, not corresponding to tax invoice. DC plus e-way bill for 1 crore plus GST and a copy of invoice which is for 10 crore plus GST. Invoice is only one, but I will send a photocopy of invoice. This will happen for first lot, second lot, third lot, fourth lot, fifth lot, etc. Last lot, what will happen? Same thing. Last lot also same thing. Delivery challan will be there along with e-way bill for that 1 crore plus GST, assuming the last lot is of 1 crore. Now, in the last lot, I will give the original invoice so that recipient can take the full input tax credit. First lot, DC, e-way bill for the goods in that lorry plus copy of invoice. Second lot, same thing. Third lot, same. Last lot also same thing. Only difference is now I will not give copy of invoice, I will give the original invoice. I'll give the original invoice. Why I am doing this? Though there is supply, but supply is of 10 crore plus GST, but the goods in that vehicle is only 1 crore. For that reason, I am giving delivery challan. Normally, delivery challan will not have GST, but in this case, it will be having GST. Normally, delivery challan will not have, but in this case, it will be having GST, because this delivery challan is part of supply. It's one small part of supply. Are you clear with this understanding? Right. And understand that for any reason, when there is supply, but I could not have not even tax invoice when the goods were removed, immediately I should raise tax invoice, which means there was supply. I was not sure what supply it is, so I gave delivery challan. The moment I am very sure supply is happening, I should raise tax invoice. I should raise tax invoice. To understand this, you can take this second circular. Jewelry sector. Now, understand that I am a wholesaler of jewelry. I take 10 sets of jewelry to many shops, to Joy Alucas, Joss Alucas, to Lalita Jewelry, so on, so forth. I take this 10 sets of jewelry. First, I go to Joy Alucas. Actually, Joy Alucas is not aware that I am going to come. So, when I am taking those 10 sets of jewelry to Joy Alucas, what is the document that I will carry? Am I selling them? No. I am only going there for showing those items. So, what is the document? Delivery challan. They accept it. They accept 2 sets of jewelry. Now, what should I do? When they are accepting, okay, when means I am talking about the real time. Should I raise tax invoice immediately now, or should I go back to my office and then raise? Immediately. I should carry a manual invoice book. I may be a person fully understanding information technology, not at all carrying any hard copies, but this mandates me to carry manual invoice book. I should carry a manual invoice book. I should give an invoice. I can go and feed back in my system again, but I should give a manual invoice then and there itself. The moment I go outside Joy Alucas, if an officer stops me, I should be in a position to explain. I should tell that I removed 10 jewelry initially, for which I have a delivery challan. I have sold now 2 jewelry, for which I have a manual invoice copy, which I will be putting in my system. So now balance I am having 8. Immediately I have to raise. Immediately. I should not tell, once I am entering outside Joy Alucas office and officer stops me, if I have 8 sets of jewelry, I will not be in a position to explain. My delivery challan will show 10 sets, but what I am having in hand is only. So for that they tell carry manual invoice book. This is called as chain sales. You will not decide, you will go shop by shop and you will say, you have to carry a manual invoice book. You don't have an option. You have to carry a manual invoice book. Right, that is given here. And understand that e-way bill, whenever you are talking about the goods being transported on delivery challan in lieu of invoice, the same should be declared in e-way bill. This we have discussed in this particular point. In this transportation in lots, I was raising delivery challan in lieu of a tax invoice. Actually, it was supply. But I am raising delivery challan in lieu of tax invoice, giving reference number of tax invoice. I should mention that on e-way bill also, that this delivery challan is actually raised because of some difficulty. That is supply. I should have raised tax invoice, which I have already raised. Now I am raising delivery challan because supply is of 10 crores, invoices of 10 crores, but what is moving is only of 1 crore. So for that reason, I am raising delivery challan having reference number of tax invoice, which never till now you not have thought that delivery challan will have reference number of tax invoice, because both are mutually exclusive, isn't it? But now you are having a delivery challan having reference number of tax invoice. This e-way bill will be corresponding what? Delivery challan, right? So in e-way bill also you should mention that this e-way bill is against delivery challan, but there is an option. It is in lieu of tax invoice. This delivery challan is in lieu of tax invoice. So that should be clearly mentioned. That should be clearly mentioned. Right. Now there are other two circulars also which deals with your delivery challan. Okay, done with this chapter which deals basically with your delivery challan. I'll just give the facts, you have the answer. You have to just answer it. I'm an artist, I'm a painter. Now, I am sending my paintings to art gallery. What document? Delivery challan. Art gallery, out of 10 paintings, 2 paintings are light and they are purchased. What document? Tax invoice. Who has to raise? The art gallery or the artist? Art gallery is not involved. Art gallery will take a commission for which it will give a tax invoice within 30 days. Supply of service. But if I change this question and I tell that art gallery is agent as per schedule 1. Art gallery is agent as per schedule 1. What will be your answer? I am sending same 10 paintings to art gallery. Artist to art gallery. Now art gallery is my agent as per schedule 1. Artist to art gallery, 10 paintings are going. It is deemed supply. If it is deemed supply, what document? Tax invoice. Who will give? Artist. Deemed supply. Now art gallery, there are 2 paintings which are selected. Right. What document? Tax invoice. Who will give? Not the artist. It will be given by the, because now art gallery will act as the owner. That's it. Recollect supply. Answer is given here. Right. I am sending 100 units as samples outside India for exhibition outside India. Exhibition outside India. What document? Am I selling those items? So what document? When there is no supply, what document? Delivery challan. Out of 100 units, 40 units are selected. They are purchased in USA. Now what document? Tax invoice. Balance 60 units should return back within 6 months. Supply on approval basis, sale on approval basis. If they are not returned back within 6 months, then it is deemed supply. I have to raise tax invoice even for that. This we have already discussed when we have discussed your due date of invoice. For sale on approval basis, it is due date of invoice is actual date of supply or 6 months from the date of removal, whichever is earlier. So that is all and all about your delivery challan. First 4 circulars are dealing with your delivery challan. Circular number 5 is dealing with your dynamic QR code. We have already discussed. You are making advance payment. Should I print dynamic QR code on that invoice? You are making advance payment. Should I give e-payment dynamic QR code? No, already payment is made. There's no requirement. At all. See, e-payment dynamic QR code is for payment. You already made me advance payment. All I can do is I can write payment reference number on my invoice. See, what is the objective of e-payment dynamic QR code? So that you make me digital payment. But you have already made me the payment. So that circular is given here. And when you talk about all the other circulars, this circular number 7 and all, it all deals with your input tax credit chapter. Samples, free gifts. Don't you recollect that? There are 2 options. Either I have the input tax credit and pay output tax, or I reverse input tax credit, I don't pay output tax. That's it. Buy one, get one free. Should I reverse any input tax credit? Buy one, get one free, or buy more, save more. Buy one, get one free. So if I am selling one shirt and one shirt is free, should I reverse input tax credit on one shirt? No, it is not free. It is a marketing strategy. I am selling 2 shirts. There is no need of reversal of input tax credit. There is no need of reversal of input tax credit. Buy one get one free doesn't mean that it is actually free. Otherwise, department will tell that it is free. And if it is free, you have to reverse your input tax credit. Paste Pepsodent paste with brush free. So should I reverse input tax credit on my brush? No. It is a marketing strategy. I am packaging this entire thing and selling for a combo price. Selling for a combo price. I need not reverse any input tax credit. Volume discount, secondary discount. We already discussed. Discount after supply. Discount after supply. What should I do? Can I give credit note? Yes. I can reverse my output tax, but with the condition that my customer is reversing input tax credit. My customer is reversing input tax credit. So these are all points that we have discussed in different places already. So that's all with your documentation chapter. And if you see your miscellaneous provision, section 32 we have discussed. If you are unregistered supplier, you cannot collect tax. 33 we have discussed. If you are registered supplier, you can collect tax, but as per law and on all the documents, show price and tax separately. Show price and tax separately. Is there any format of invoice? No. They have said these are the contents it is required. In whatever format you want to give, you can give it. Contents, they have said these are contents should be there. Which format you want, you decide. You decide. And every document will have a serial number. That will be a 16 digit. Maximum it can be of 16 digits. 16 digits. Containing alphabets, numbers, and only two special characters are allowed, which are dash and slash. Dash and slash. Right. This is everything about document given by the assessee. The small area is all about document given by the officer. Every communication that officer will do with you will have a document identification number. Every communication that officer will have with you will have a document identification number, so that you are rest assured that it is a genuine notice, genuine mail, it is not a spam. It is not a spam. And if that document is not having document identification number, then it is invalid. In exceptional cases, an officer can give you a document without a document identification number when there is a technical difficulty, network issues, net issues, or when the communication is to be given at a short notice and the officer is outside his office. Only two are the cases where departmental officer can give you a document, be it notice or be it intimation, whatever it is, without DIN. What are those two cases? Technical difficulties, portal issues, or it has to be given urgently, but officer is outside the office for discharging his official duties. Then he can give you a document without DIN. But even in those cases, within 15 days, he has to generate DIN for that document. Even in those exceptional cases, within 15 days. Now he has given a document without DIN. Within 15 days, he has to give DIN to that document, and he has to take approval of the senior officer. That there was an urgent scenario. I gave a document without DIN, but within 15 days, I allotted a DIN, please approve the same. Please approve the same. This is the only small area where you are talking about document to be given by officer. Rest every entire chapter we were discussing about document which is given by the assessee. Different documents given by the assessee. Accounts and records. The provisions are discussed in your section 36 and 37 along with corresponding rules 56, 57, 58. Let us focus only on the important concepts or the principles of your accounts and records. Who are all required to maintain your accounts and records? Basically, only registered persons. Few unregistered persons are required to maintain your accounts and records. They happen to be the warehouse keeper and the transporter. Warehouse keeper and the transporter. So, who are required to maintain accounts and records? Registered person. Unregistered person, only two categories. Warehouse keeper and the transporter. Now, till how long you are required to maintain your accounts and records? Normally, you are required to keep your accounts and records till 72 months from the due date of filing your annual return. If the due date is extended, you have to maintain your accounts and records beyond that. From your due date of filing annual return, which means if it is financial year 23-24, 72 months, which is nothing but how many years? 6 years. 6 years will start from where? If at all you're talking about financial year 23-24, 6 years will start from 31st of December 2024. 31st of December 2000. From that 72 months. For which year? For financial year 23-24. 23-24. Right? It is actually more than 72 months because it starts from where? Due date of filing your annual return. But, if at all, your books of accounts pertains to a subject matter which is pending in appeals, revision or any other proceedings or investigation even by an officer, not necessarily in appeals, it is pending for any proceedings at adjudication level or at appeal level. In that scenario, you have to maintain your accounts and records. The first concept remains the same. Your 72 months from the due date of filing annual return remains the same. Or 1 year from the disposal of that matter. 1 year from the final disposal of that matter, whichever is later. If at all there is any issue which is pending for financial year 23-24, any proceedings, not necessarily appeal proceedings, any proceedings pending for that financial year 23-24, the first principle is the same, 72 months from the due date of annual return compared to 1 year from the time when that proceedings stopped and attained finality. It stopped and attained finality. Compare both the dates, whichever is later. Now, what to maintain will be discussing in the next page. Basically, Commissioner has got powers to tell that you have to maintain certain extra records for certain special categories, and Commissioner also has powers to tell that okay, certain persons are required to maintain certain lesser records because of difficulty. So there are certain normal set of records. Commissioner for certain persons can tell that apart from this, maintain extra records. For certain people can tell that okay, you are going to get a concession, you need not maintain all these records. Now when you talk about the place where you have to maintain the records, please understand that records are to be maintained at each place of business, not only at your principal place of business, but also at all other places of business pertaining to that particular godown. Supposing there is a godown and you have goods there. The goods are being transferred from head office to branch office. In godown, you are not required to have the financial statements there. You are required to have what? The inward delivery challan and the outward delivery challan from that godown. What goods came in for that inward delivery challan, what goods went out for that outward delivery challan. So, record documents have to be maintained at all the places of business. And assume that officer is coming and is finding certain records in your place. There is a general presumption that whatever records are found at your place, it is presumed that it is maintained by you. You cannot tell that no, these records does not belong to me. It is presumed that these records are belonging to you. Now, there are concepts of hidden deemed supplies in many places. Now, one such case is here. If the registered person fails to account for goods and services, which means he is not having proper records. There are goods, but he is not having proper records. Then proper officer shall deem that they have been not accounted and they have been supplied. It will be treated as deemed supplied. It would have been treated as deemed supply, and provision of sufficient 73, 74 are there. For example, there is a go down where officer finds that there is 1 crore stock of goods, for which he finds that there is no registration taken for that place. It is not added as additional place of business. Also, he finds that there are no documentation, inward DC and outward DC. What he will do? He will tell that these goods are not accounted, and he will tell that I will assume that it is deemed to be supplied. Deemed to be supplied, and 73, 74 will come. Now another question will come. When they are actually supplied, then again you have to pay GST? Yes. This is for non-accounting that you have to pay. Deemed supply. They'll assume that you are doing this for a continuous long point of time. So whatever stock we have found, it is deemed to be supplied. Deemed to be supplied. And when you actually supply them, again you have to make the payment. So this is a hidden concept of your deemed supply. Hidden concept of your deemed supply. Now, what all accounts are, records are to be required by every registered person. All associate, every registered person. Simple records which you will find in any software that you maintain. Most of the details you will find in any software that you maintain, you will find all these details. Inward supply, outward supply of goods and services, you will have the track of that. What are the goods and services that have been imported and exported? If they are asking you to tell that these are the goods that have been imported and exported, you will be having separate line item for that in your software. Supply which are attracting your RCM. You have to tell out of these supplies, these accounting that you have done, what supplies are attracting RCM. Obviously, you will have either it will be there in the software itself or you will be having working papers for that. Then details of tax payable, tax collected, paid and ITC. Please understand that these details, tax payable, tax collected and paid and ITC availed will not be applicable for a composition taxable person, because composition taxable person cannot collect tax and composition taxable person will not have any ITC. And finally, when you're talking about inventory details, this inventory details is also not required to be given by composition taxable person. The advantage, the main advantage of composition taxable person, if you remember when we discussed, was not maintaining the stock. See, this was not an advantage. It does not collect tax, therefore, there's no question of having the records for tax collection. It cannot avail ITC, therefore, there's no question of having the records for ITC availed. But this is an advantage. A composition scheme dealer need not maintain the stock records, stock details, which is required to be maintained by all the other types of person, regular persons, be it RTP, be it CTP, be it NRTP, they have to maintain all these records. What are the stock records? Goods received and supplied, starting from opening balance, what is received, what is supplied, what is the closing balance. At times, when you talk about what is supplied, it will have extra details like what goods are lost, stolen, destroyed, written off, disposed by way of gift samples, scrap and wastage. In all these cases, you have to reverse your ITC also, except scrap. Except scrap. This information will be available with you. What was my opening balance? What was my opening balance? What I received, what I sold, and what is the closing balance? Ideally, it should match. But if there is a difference between the calculated closing balance and the actual closing balance, it might be because of scrap, it might be because of lost, stolen, it might be because of goods being destroyed or written off or given as gifts or free samples. So that information should be there, maintained by you. And these are all the details of the goods and services that you get along with the stock details. Now, in addition to it, you are required to maintain the name and complete address of all the suppliers from whom you purchase, all the customers to whom you sell, except where relaxation is there. When you see a document chapter, you will find that if at all, if it is B2C case, if it is B2C case and if the value is up to 50,000, value is up to, you will not have name and address of the customer. You will not have name and address of the, so normally customer details also, everything is required. When it is not required, B2C 50,000, B2C 50,000. In that scenario, you will not have the customer details. You will not have the customer details. And you have to give the list of all the premises where you have stored the goods, including store the goods in transit. Simple reason, we have already discussed the following part. If at all it is found that the goods are there without proper documents, not accounted for, it will be treated as deemed supply. So this is again repeated here. Deemed supply concept is again repeated here. Now advances. For advances in your document chapter, it is said that you have to maintain receipt voucher and refund voucher. So when you talk about your advances, you are required to maintain receipt voucher and refund voucher. Also adjustment of advances. Refund voucher will be very rare. It is receipt voucher and that has been adjusted against the invoice issued. That has been adjusted against the invoice. What is advance, what advance is received, whether it has been adjusted or whether it has been refunded. Please understand, when you talk about advances, the details are required to be maintained only for service sector. Only for, not for goods sector. Not for goods sector. It is required to be maintained only for service sector. The reason is your time of supply. The reason is your, for goods time of supply is normally, forget about composition scheme. Normally it is actual date of invoice or due date of invoice. They don't pay any GST on advances. And documents issued and received. This you will find in the document summary which you have to report even in your GSTR 1. What are the invoices raised, credit note, debit note rates, bill of supply, delivery challan, receipt voucher, refund voucher, payment voucher in case of RCM. All these things will be there in your software if you are maintained properly. All the details will be there in your software. You just look at this entire point. Just think of a very basic software. Don't go to SAP level. Very basic software. QuickBook or Tally or whatever it is. You'll find that you'll get all these details in the software that you maintain. All the details. That if at all you are maintaining all the details properly, you can easily find all the details right directly from your software, including your stock details. Including your stock details. Now, there are few persons who are required to maintain special records. This is the list of records that is to be maintained by all assessees. That is to be maintained by all assessees. Now, there is a list of records which is required to be maintained by specified assessees, special assessees. Now, if at all you are talking about a manufacturer, he has to maintain monthly production details. Monthly production details. Raw materials, what was opening balance, what came in, what was issued for production, what is the wastage, and what is the closing stock. Whatever is produced will go and sit in your finished good stock. So you have to maintain your monthly production details where you will be giving the details of your manufacture. Manufacture means your raw materials, opening balance of raw materials, purchase of raw materials, production of raw materials into finished goods, including wastage, and closing balance of raw material which is yet to go for manufacture or production. So that will be there. But important point is monthly production records. Before GST, manufacturer was required to maintain daily production records. After GST, it is monthly production records. Supplier of all services, this was not required at all because it's automatically is covered there. What is the goods and services that you receive and what is the service that you supply. See, if you see the earlier list, that automatically was covered. Inward supply and outward supply. This was unwarranted. This was already covered here. Inward supply and outward supply of goods and service already covered. So that was not so important. Now when you talk about an agent, now agent is required to maintain certain special records. Authorization from the principal that he is acting as an agent. If he is having multiple principals, each of them separate authorization. He has to tell the description, value, quantity of goods, what is received and what is supplied. Basic accounts, what he has received on behalf of the principal and what he has supplied on behalf of the principal. He has to give the accounts, which means he will be having the stock on which he is not going to make any payment because the goods does not belongs to him. Finally, when he is giving the accounts, he has to make the payment of only what? What he has sold. What he has sold after deducting his commission. After deducting his, we will prepare accounts in that manner. And tax paid on receipts of supply on behalf of the principal. This becomes very important if he is a special agent. This becomes very, very crucial and important if he is a special agent who is authorized to raise invoice under his own name. This has been said a number of times. Books of accounts of both principal and agent will not match with GST records. Will not match with GST records. And it again becomes very important for the proper officer to understand who is the real owner and compare your books, compare both principals and agent books with the GST records. And if there is a difference, don't worry. We have something called as GSTR 9C. Give the reasons for reconciliation. Give the reasons for your reconciliation. And finally, a builder or a works contractor. Here also he has to maintain the record separately for each of the works contract. If a builder is doing 10 works contract, separately for each of the works contract, he has to maintain the details separately. What details? Name and address of the persons on whose behalf the work is being done, which means his client. Description, value, quantity of goods and services received and used. In contract 1, what was the goods received, what was the cement received, sand received, and what has been used. The details of payment received in respect of each contract. What is the amount that he has received from the customer? And even the list of the suppliers from whom he has received the goods. Now, this is actually very important, because normally what will happen is he'll try to take that extra goods or services and shift it from one contract to another contract and present to the officer in a way where he is satisfied that all the goods and services are proper. Correct? Think of a builder who's doing, think of G Square, who's having multiple projects across the city. Don't think of the plots that they are selling, think of even the projects that they are, construction that they are doing. Now, what will happen? If they give it together, they'll manipulate it. What is expected for them? Give it for each works contract. The name and address of the customer and the name and address of the supplier from whom we have purchased. The payment which is received from the customer. And what was the goods, including the quantity. They are not only restricting to description value, they are even talking about the quantity. What you received at that site and what you have used at that site. What is the balance goods lying at that site? Give the list. You need to understand that these categories, forget about service provider, manufacturer, special details are very important. Agent, special details are very important, because GST records will be different and books of accounts will be different, more importantly for a special agent. Works contracted, again very important, otherwise a builder will try to give the details consolidatedly and he may try to manipulate. These are the special details to be maintained by special persons. Apart from the details given above. These are all extra details. Now, if you recollect, we have discussed initially that there are records to be maintained by few unregistered persons. Who are they? Warehouse keeper and transporter. Warehouse keeper and transporter have to maintain the records even though they are very simple understanding. Why? The goods of the assessee will be going via transporter and warehouse keeper. So they have to maintain separate details. Even if they are unregistered, they have to maintain separate details. So you are talking about warehouse keeper, you are talking about a transporter. Obviously, there will be one more person, custodian, who is having the goods on behalf of other person. Similar to warehouse keeper. Now, warehouse keeper's role is more important. Warehouse keeper will have details of what? Who's the consigner? Who's the consignee? So, when you talk about highways, you'll find out lots and lots of big warehouses. Most of them will be registered. But even if they are registered or unregistered, these details have to be maintained. Extra details have to be maintained. In your premises, whose goods are there? Who's the consignor of the goods? And if the goods are to be sold, consignee is free. Also give the consignee name. Who's the consignee? Details of the goods. When it came inside, when it was dispatched from the consignor, what was the movement, when it received and when it is giving. The entire movement details. When consignor dispatched it, when you received it, when you are going to dispose it. All the details should be maintained by the warehouse keeper, and it should be in such a manner that if proper officer in real time is coming for physical verification, real time, he should give the details item wise and owner wise. Think of Flipkart, think of Amazon. They'll be having warehouses having goods of multiple persons. So the goods should be kept, they'll be having racks, rack 1, rack 2, rack 3, rack 4, rack 5. So it should be kept owner wise. Or also it should be kept item wise. Owner 1 is having dealing with 10 items. So it should be kept item wise. So all the warehouse keeper, Flipkart, Amazon are only examples. It is not necessary that they should be electronic commerce operator. Not mandatory. They can be pure warehouse keepers. Not having any electronic commerce operations. Pure warehouse keeper. Even then they have to maintain the details. Why? They are going to have the goods of multiple persons. So they have to keep owner wise and item wise, so that when officer is coming for physical verification, he'll verify. And by the way, please understand that this warehouse will be registered by each of the consignor as their additional place of business. Each of the consignor has their additional place of business. If I am having my goods in a warehouse, where the warehouse keeper maintains my goods and other goods, should I add that place as my additional place of business? Yes, mandatory. I don't have an option. I have to add that place. So what is happening? The inspection is coming to me. I might have been asked that what are your goods status and what is the stock? I tell that total stock is 1 crore. When the physical verification is done in my premises, they find only 80 lakhs. I tell that yes, it is 80 lakhs in my premises, 20 lakhs is kept at warehouse keeper's place. So they'll go and verify with the warehouse keeper, and warehouse keeper should be having that information readily available. And transporter at each of their branches, it should give the details of goods being transported, description of goods being delivered. Final transportation is done, goods in delivered, which means starting of transportation and end of transportation. The beginning of transportation and the end of transportation, even goods in transit, along with the GST number of both consignor and consignee, which means both warehouse keeper and transporter are required to maintain the details of consignor and consignee. Transporter surely will have details of consignor and consignee. Warehouse keeper may have only details of consignor, may not have the details of consignee immediately because it is not yet being sold. But when it is sold, he should have the details. When it is sold, he should have the details. Transporter real time will always have the details of consignor, consignee. Warehouse keeper will surely have the details of consignor real time, but consignee, when it is finally dispatched, he'll have the details of consignee as well. He'll have it, but not immediately. Maybe not immediately. So that is the difference when you see. And by the way, if you understand documentation chapter, GTA has to maintain extra details on the invoice called as consignment note. That invoice with extra details on the invoice by GTA is nothing but all these details. Who's the consignor? Who's the consignee? Origin, destination, description of the goods, in which vehicle it is being transported, goods carriage number, and who's going to pay GST, whether the consignor or the consignee or GTA himself. So that extra information will be readily available, not as a separate record. It will be there on the document itself. It will be there on the document itself. Obviously, that is one document. You have to put that in your software and make sure that you get the entire report. You get the entire report. And custodian, who's merely acting as clearing and forwarding agent on behalf of registered person. Custodian is a bit different from a warehouse keeper. He is having limited role. He'll handle the goods on behalf of registered person for a very limited point of time. He is not keeping the goods for custodian for a very limited point of time. Supposing the goods are T estate is there. Auctioneer will be there. That auctioneer will be auctioning the tea, and it might take some few days. So by that time, the goods are under control of auctioneer. He is not acting as a warehouse keeper. For the time being, the goods are with the auctioneer. So that will have the details of all the details of the goods, when it was received, when it is dispatched, true and correct details of the goods which is handled by him, basic minimum details. You might find their details very similar to the warehouse keeper, but it is lesser than that. Basic minimum details, because there it was specifically said that owner wise, item wise, when we come for physical verification, keep it ready. Here, produce the details when required by proper officer. Just basic minimum information that you are acting as custodian or clearing and forwarding agent. When you receive these goods, the goods belongs to whom and when the goods were dispatched. Another difference. Warehouse keeper will be always added as additional place of business by the registered person. But custodian, not always that place will be added as additional place of business by the registered person. Now, when you talk about these special persons, mainly warehouse keeper and transporter, they may be registered, they may not be registered, but these details are to be required to be maintained. If they are registered, no worries. But what if they are not registered? What if they are not registered? If they are not registered, they have to go for centralized enrollment mandatorily. This is not registration, this is centralized enrollment. Registration is state-wise. Enrollment is pan-India wise. Why? Officer tells that the goods movement is all controlled by them. The entire goods movement is all controlled by them. So we should have a track of them. Though they may not be registered, But we should have a track of them. How to track them? If you are unregistered transporter, unregistered warehouse keeper, don't worry. No GST number, don't take it. But mandatorily take centralized enrollment. Centralized, when I tell centralized enrollment, Pan India, one enrollment. Pan India, one enrollment. They have to get centralized enrollment by filing a form called as GST ENR 1. They'll get a unique enrollment number which is valid for all the states. It is easier for the officer to have a control. Many times you will see that enrollment number when you are talking about e-way bill number. If the transporter is not registered, when you are filing your part A of e-way bill number, you will not give the GST number of the transporter, you will give the enrollment number of the transporter. Enrollment number of the transporter. This is for unregistered transporter and unregistered warehouse keeper. Now, there is an optional centralized enrollment number for a registered transporter. This option is not for registered warehouse keeper, and once you complete it, you'll understand why it is not there for registered warehouse keeper. They tell that transporter and warehouse keeper, if you are unregistered, mandatorily centralized enrollment. Warehouse keeper, if you are registered, nothing, not required. Transporter, if you are registered, you still have an option. What you can do? You can go for optional enrollment number. Again, the form number is different, ENR 02. Optional enrollment number. Now, you may think when he is registered, why optional enrollment number? This transporter, though is registered in multiple states, multiple GST number, is going for centralized optional enrollment because he will manage all his e-way bills, only through centralized, unique centralized enrollment number. Unique centralized, then the control of all the e-way bills will be at one place. Which transporter will go for it? The transporter which is very high corporate and having high tech softwares, they will go for this unique centralized enrollment number, which is optional because they are registered. If they are unregistered, it is mandatory. Even though they are registered in different states. So if a transporter is registered in 5 states, in each of the 5 states, e-way bill will be through that particular GST number, routed through that particular. If they want that all the e-way bills of all the 5 states to be routed through one number, it will be unique centralized enrollment number, which is optional. Now, finally, what are the records to be maintained? Can you maintain electronic records, or can you maintain even manual records? You can maintain manual records as well as you can maintain electronic records. Now, certain special points about manual records. Make sure that there is no cancellation erasement. If at all it is there, please put a valid signature. Manual records can be maintained. No one is asking you, because if you see the definition of records per se, document or records includes written document, printed document, or even electronic document in terms of IT Act. Either it is written, or you have taken the printout, or you keep it in your software, take even printout. So there are certain aspects that you have to understand. If it is manual record, make sure that there is no scribbling. It is neat and clear. If at all you have write down and you have written something, make sure that corresponding person is putting cross signature that this change happened on my authority, under my control. This is the care that you have to take for manual records. Electronic records, what is the care that you have to take? You have to take proper backup. Tomorrow when office is asking and telling that please give your books of accounts, you should not tell that gone, tally is corrupted, or QuickBook is corrupted, or my SAP is corrupted. You have to take proper backup. Second special point, if at all department is asking for printout and giving them, take it and give it. Don't tell that I am going by Go Green policy, I am not going to take printout. Your Go Green policy will not work though. If department officer is asking you, give us the printout, you have to give a printout after signing all the documents, give them, attest it and give them. You cannot tell just because you are maintaining electronic records, you are not going to give hard copy. If it is asked, give it. Third, certain high-ends or mainly SAPs, there will be a lot of codings that is there, passwords that is there, share everything. You cannot tell, no, these codings are very secret to us, passwords and all will not share. What you have asked, electronic records, take it, now you do your work. No, all the codings, all the passwords, whatever is required, give us. What is required, give us. These are the due cash of all these records that you have to take care of. But both is allowed, manual records as well as your electronic records. That's all about your accounts and records. Now, moving on to a chapter which is called as E-way bill. E-way bill chapter, we have already discussed that there's a special portal for E-way bill, isn't it? Correct. So, out of the 3 portals, we have one portal for your E-way bill. This is the only portal, www.ewaybillgst.gov.in. This is the only portal, www.ewaybillgst.gov.in, which is managed by National Informatics Center. The other portal, the main portal and the e-invoice portal are managed by GST network. GST network. Now, when you talk about the provision of E-way bill, E-way bill is entirely discussed in your section 68, read along with rule 138. Basic provision is 68 read along with section 68 read along with your rule 138. These are the basic provisions that discusses about E-way bill. Then you may ask that what are these other provisions? When you talk about your 138A or B or C or D or E, they are talking about certain other provisions of E-way bill. Yes, they are related to E-way bill, but certain other provisions. So, for example, 138A talks about a basic thing, that what all documents and devices a person in charge should carry. What all documents and devices a person in charge should carry. So, that is 138A. 138B and C talks about basic inspection and special inspection. Normal inspection will be of documents and conveyance. When an officer stops a vehicle, he will first check the documents and the conveyance, outer look. If he is having more doubts, what he will do? He will open the packaging of the goods and verify the goods. So that is 138B and 138C. And your 138D is a power given to the person in charge to report something against proper officer. If at all a vehicle is detained for more than 30 minutes, the vehicle is stopped for more than 30 minutes without any reasons being assigned. Who is having the power? Not the assessee, transporter. Person in charge means the transporter is having the power to report it on the portal. Whether it is used or not is a big question, but provision is there. Spider-Man, with more power there comes more responsibility. That proverb is not understood by the proper officer. So he will do this thing. With more power, I get more power to harass. Right? So there is more harassment. There is more. To stop that harassment, what government is doing? Okay, if the proper officer is harassing the transporter, don't worry, you have the power. If your vehicle is detained for more than 30 minutes, you please upload that information on portal. So who is getting that power? Not the assessee, whose goods are being transported, but because assessee will never know that vehicle was detained for more than 30 minutes. Are you clear with this understanding? And transporter will not carry only one person's goods, he will carry many other person's goods. And a very, very interesting provision. We have understood in return filing chapter what happens if you are not filing your return, and in registration chapter, if you are not filing a return for a particular period of time, suo motu cancellation. Suo motu, right? Government is government, right? If you feel government is not creative, you are totally wrong. See the budget of every year when it is coming. Recently 2 days back, you have a new budget, right? Always when you see the budget, you will always find that government is very creative when it comes to their safeguard measures. So what is this provision all about? If you are not filing your return, there might be cancellation, suspension, cancellation proceedings being started, also suspension being initiated, etc., etc., etc. Other things will happen. One of the things that will happen is you will not be able to do your business. Why? You will not be in a position to generate E-way bill. You will not be in a position to generate E-way bill, and no assessee will take the risk of sending the goods without E-way bill, because penalty for non-generation of E-way bill is too much. Right? That being the case, this is an indirect blockage. 138E. 138E. Now, talking about your Section 68. What is basic Section 68 talking about? Section 68 tells that the person in charge of any conveyance carrying the consignment of the goods exceeding a particular value, which means the goods inside the conveyance should be of a value more than a particular limit. What is that limit? We'll discuss. We'll discuss that particular limit. What he is required to do, he shall carry the documents and devices as prescribed. So basically the responsibility is on whom? The responsibility is on the person in charge to make sure that whenever he is transporting the goods, along with those goods, if the value is exceeding a particular limit, he should carry certain documents and devices also. Certain documents and devices. Now, why he should carry? Because proper officer is having the power to stop the conveyance, intercept the conveyance, and he has the power to verify the documents and devices. If at all he is convinced, he'll let go. If he is not convinced, he has greater power to go on for detailed inspection. What he'll do? Inspect the goods. Break open the packaging of the goods and inspect the goods. Right, that is the basic provision of section 68. Now, you may wonder that what documents and devices are they talking about? Now we understood that person in charge should have certain documents and devices. If not, proper officer will, why he should carry? Because proper officer at any point of time may stop his conveyance and tell that show the documents and check the conveyance. If he is not satisfied, officer can also inspect the goods. Now, what documents and devices are required to be carried by person in charge? Please understand this basic thumb rule that e-way bill is a supporting document. Keep that in mind. Don't write that wording in exams. We have used a lot of terms for understanding purposes, but they are not the keywords to be written in exam. Basic understanding, e-way bill is a supporting document. It is not the main document. Main document, if there is a supply, what is the main document? Louder, tax invoice. For composition scheme dealer, bill of supply. So if there is a supply, what is the base document? Invoice or bill of supply, isn't it? Invoice or bill of supply. So if there is supply, the main document is invoice or bill of supply. If there is no supply, then there is movement of goods but no supply. What is the document? Delivery challan. Delivery challan. If the goods are imported, what is the base document? If the goods are imported, what is the base document? Bill of entry for imported goods. These are the base documents. If there is supply, base document is, if there is supply, your base document is tax invoice or bill of supply. If there is no supply, your base document is delivery challan. And in case of import of goods, your basic document is bill of entry. Bill of entry. These are all your base documents. Now, what would be your supporting document? In all these cases, your supporting document will be your e-way bill. Now, understand that e-way bill part A will always contain the details of the base document. Part A of e-way bill, we'll discuss that it will always contain the details. Copy paste of the whatever details are there in the base document, it will have the same details. It will show the invoice number, invoice date, supplier's name, GST number, recipient's name, GST number, etc. All the details will be there. Basic document details will be copied in the part A of e-way bill. Part A is nothing but the details of tax invoice or bill of supply, or the details of delivery challan, or the details of bill of entry. Same details would be there in your part A. In your part A. Right, so that is the basic document. What is the supporting document? Supporting document is your e-way bill. Either you can have e-way bill number mentioned, that is sufficient, or you can have the physical copy of e-way bill. Normally people will have tax invoice with e-way bill, bill of supply with e-way bill, delivery challan with e-way bill, bill of entry with e-way bill. What you can do, you want to go out of your hard copy of e-way bill, don't worry, write the number. On the basic document itself, let it be tax invoice or bill of supply or delivery challan or bill of entry. Write the e-way bill number. Or in certain cases, you'll have something called as e-way bill, which is mapped on radio frequency identification device. This is not applicable for everyone. This is not applicable for everyone. Here we are talking about devices. You discuss about document. Device is only the last part. E-way bill, neither the physical copy is not there, nor e-way bill number is mentioned on the basic document. E-way bill will be mapped on a special device which is called as radio frequency identification device. Now, first point, this radio frequency identification device is not required for all the transporters. It is only for the notified transporters notified by the commissioner. To put in a very simple terms, big transporters who have the capacity of installing a special device on all their trucks. Supposing a transporter is having hundreds of trucks, that transporter should have this device on all the hundreds of trucks. So first, it is not applicable in all the cases. It is applicable only for notified transporters. So whether all the transporters will have a special device on their conveyance? No. It is only notified transporters who will have the special device which is called as radio frequency identification device on their conveyance. And what it will do? Supposing there is a truck of mine which is carrying all your goods. There is a truck of mine which is carrying all your goods. One truck at one point of time carrying all your goods. Each one of you would have raised e-way bill. Every one of you would have raised e-way bill. Now, as a transporter, what I can do? I am required to map all your e-way bill numbers on my device, on my information technology. They want to promote that on my special device. So, if one of my truck is carrying all your goods and all of you have generated your e-way bill, whatever e-way bill you have generated, that will be there on my device. So, where that truck, when it is before it is moving, all your goods e-way bill number will be mapped. All your goods e-way bill number will be mapped on that device to tell that this particular movement of truck is having all of these persons' goods and these are their e-way bill numbers. Now, what is the beauty or advantage of it? Normally, officer who is having the power to intercept the vehicle, he'll stop the vehicle, ask the transporter to give all the documents, base document, e-way bill, supporting document, etc. Now, officer need not do always that. At certain special places, these officers are called as squad officers. These officers are called as squad officers. At their check post, what they'll do? They'll have a device reader. They'll have a device. On the conveyance there is device. What officers will have a device? Using the device reader, they will check all the details. If they are satisfied, they'll let go the vehicle. It is saving of time of the officer and of the transporter. If they are having some doubts, then they'll ask the vehicle to stop. That is the beauty of this particular device. Right. So, is it applicable for all the transporters? No, only for notified transporters by the commissioner. What are they required to do? They are required to install a particular device on all their conveyance. That device is called as radio frequency identification device. RFID, radio frequency identification device. And every time they are starting their movement, they are required to map all the e-way bills prior to movement of goods. What is the objective? It will not only save the time of the officer but also the transporter. So, officer may not stop all those vehicles if he wants to do the basic. What is the basic check first of all? Basic check is checking the documents. Now, why I should stop the transporter? If I am the officer, if that particular transporter's conveyance is having a device, I have a device reader, I will read it. I will see that okay, this particular truck is now carrying 15 persons goods and all of their e-way bill is already mapped. I will check that. If I have further doubts, only then I will stop. Otherwise, I will let go the vehicle. So that is the purpose. But having said so, I am repeating this again and again. Is it required for all the transporters? No. It is only for notified transporters. With a simple understanding that all of them will not have the potential or the capacity to have these special devices on all their trucks. So that is an understanding behind this particular provision. So that is all about your 138A. Now we'll be starting with the basic provisions of your e-way bill. Very basic provisions of your e-way bill. But before we start that, please understand and digest this point in mind, that when you talk about your e-way bill, the moment you talk about your e-way bill, one thing should be registered in your mind. We are not talking about supply, we are talking about movement. We are not talking about supply, we are talking about movement. So that point should be clearly registered in your mind. Our focus is on movement, not on supply. Please try to answer all these points. There is movement of goods. We are just trying to understand whether e-way bill is required or not. There is movement of goods, but there is no supply. E-way bill is required or not? Louder. Yes. Base document will be delivery challan, because there is no supply. Second, there is supply and movement. Normal case, there is supply and there is movement of goods. E-way bill is required or not? Yes. Base document will be tax invoice or bill of supply. There is supply, but there is no movement. There is supply, but there is no movement. There will be tax invoice or bill of supply, but there won't be any. Why? There is no movement. There is no movement. This doubt will always come in your mind. So another question. You are a supplier of service. You are a supplier of service, but you are moving the goods. Is it possible? I am a supplier of service, a coaching class academy. I am moving all these benches. Is it possible? Yes. I am moving these benches from one place, one branch to another branch. Highly possible. Highly possible. Should I generate e-way bill? Yes. So your mind will tell all these things. How a supplier of service is required to generate e-way bill. One point in mind. E-way bill is all about movement. Forget about your supply. Right from the day we started GST, the focus was all on supply. Now suddenly I am telling that delete supply, focus on movement. Focus on movement. You are a supplier of goods and there is movement. Yes. There will be e-way bill. There will be e-way bill. But in the first case, what would be the base document? Supplier of service with movement of goods. The base document will be delivery challan. Supplier of service will give tax invoice for service, but not for the goods. I am supplier of, say, coaching classes. I am moving this table, benches, etc. to another branch of mine. Am I supplying these table, benches and all? No. So that is only movement. So the base document for them will be delivery challan along with e-way bill. So that base document will differ in the first point. Second point, there is supply of goods and movement of goods. Base document is tax invoice with e-way bill. If I tell that there is supply of goods, which we have already discussed, repetition, but there is no movement. No. If you see all these 6 points, crux is one simple point. If there is movement, there is e-way bill. If there is movement of goods, there is e-way bill. If there is no movement of goods, forget about e-way bill. Forget about your e-way bill. So that point should register in your mind with utmost clarity. You should never have a doubt that e-way bill, what it has got to do with supply. After having said so, I will be asking a question where there is chance that again you will think of supply. There is a chance. Okay, let us first evaluate the basic points. Now, who is required to, what is the movement of goods which requires your e-way bill? What is the movement of goods which requires e-way bill? Now understand that we are focusing only on interstate movement. We are focusing only on interstate movement of goods. Now we ask whether intrastate movement will have e-way bill? Yes, but that limit will be decided by respective state. So Tamil Nadu state may decide that for intrastate movement of goods, this is a limit. Karnataka may decide another limit. Maharashtra may decide another limit. Delhi may decide another limit. We are not discussing it. This I am specifically telling. Otherwise, you'll have a basic point. Okay, EVA bill is only required for interstate movement, not required for intrastate movement. No, that is not the meaning. EVA bill is required both for interstate movement as well as intrastate movement. But we are discussing only why intrastate movement limit will be different for state from state to state. Back to the basics. GST law prima facie is same for all the states, but states can make certain changes, not impacting the concept. Isn't it? Back to class 1. Third, states can make certain changes, not impacting the concept. Concept is not changing. But, for example, interstate movement, you will find a list of goods for which EVA bill is not required irrespective of value. One of the examples is, say, jewelry is there, which requires no EVA bill. The same exemption limit will be there for intrastate movement also. But states, in addition to it, can add other goods. Say, for example, there is a limit of, say, 20 items which does not require EVA bill when it is interstate movement. States can tell that these 20 items, even for intrastate movement, there is no EVA bill, plus there are extra 5 items. There are extra 5 items. If those movement are within that, our state, we don't require EVA bill. Tamil Nadu always have focus on rice. Correct? Correct. So, Tamil Nadu state may tell, I am just giving an example, may tell that if you see the exemption limit, there is no relaxation for interstate movement of rice. But there may be a relaxation for intrastate movement of rice in the state of Tamil Nadu, which may not be recognized by other states. One point with the item list, exemption list. Second point with the limit. Interstate movement of goods, when you require your EVA bill, if the consignment value is more than 50,000. Tamil Nadu may tell that forget about 50,000, we'll focus on 1 lakh, which is a reality. So Tamil Nadu state will tell that intrastate movement, if the consignment value is more than 1 lakh, we require EVA bill. Otherwise, we don't require EVA bill. So this point I am very specifically highlighting. We should not have a doubt that EVA bill is required only for interstate movement. For intrastate movement, it is not required. A very wrong assumption. Intrastate movement also it is required, but the fact is that will be decided by a respective state. What is the limit and what is the exemption list? Right. So first we are focusing on solely on interstate movement. Now this point we have clearly discussed. Whether it is supply or not supply is not relevant, isn't it? The focus is on interstate movement. The focus is on interstate movement. That should be interstate movement which will require your EVA bill. Now, again, to understand what is interstate movement or not, just to understand. Supply is from Mumbai, Maharashtra to Pune, Maharashtra, but movement is via Ahmedabad. The transporter is taking the goods from Mumbai to Pune. Supplier is in Mumbai and recipient is in Pune, but the transporter is going via Ahmedabad for some reason best known to him. He is having some work at Ahmedabad, from Ahmedabad is coming back, or he decides let us have a very long trip. He goes to Ahmedabad and comes back to Pune. So for some reason, is it interstate movement or intrastate movement? GST, what GST will be there? What GST will be there? CGST, SGST or IGST? CGST, SGST or IGST? CGST plus CST. Okay, I am not talking about the answer. There is supply of goods by supplier in special economic zone Maharashtra to recipient in domestic tariff area Maharashtra. What tax will be there? ICZ means by default it is. Okay. Coming back to the movement. First case, Mumbai to Pune via Ahmedabad. Mumbai to Pune via Ahmedabad. Inter, E or intra, RA. Inter, ER, last words, or intra, RA. Second, RA or ER? Okay, second case, supplier in Mumbai, recipient in Mumbai, but one of the item is special economic zone, one of the person is special economic zone. Inter or intra? ER or RA? ER or RA? I said you right. Still, that feeling of supply will stay with you. In the first place, at least you were doubtful, ER or RA. But in the second case, very clear, ER, inter. Why? SEZ. Why? SEZ. So much efforts only to tell you that forget about supply, forget about supply, forget about supply, forget about supply, forget about supply. Focus on movement. So first answer would be inter. It is going via Ahmedabad, other state. It is interstate movement. Tax is CGST, SGST, but the movement is interstate movement. Now, tax is IGST because one of the person, supplier or recipient is special economic zone. But movement is intra. Efforts were there to tell you that clearly focus on supply, clearly focus on movement, forget about supply. Delete supply. This was the term used. Delete supply, focus on movement. But after going through GST so much, it is not so easy to remove supply, isn't it? If at all special economic zone was not said so much in the beginning, I am very confident that if I tell Maharashtra, you would have said it is intra. But now special economic zone is sitting in your mind in a very special place. By default, SEZ means if I wake you by 3 o'clock and tell that, okay, special economic zone is one of the person. Sir, IGST, you'll sleep. That is the way we have discussed that special economic zone means IGST. But now the focus is on movement. So you have to be very, very careful. Are we clear with this understanding? Right. So now you have to be very clear what is interstate movement and what is intrastate movement. Now, again coming back to the point, the EOB is required for interstate movement, supply or not, forget about it. Interstate movement, if the consignment value is more than 50,000, that movement can be by way of either road, motorized conveyance or transporter, or rail or air or water. Roadways, railways, waterways, airways. Roadways, railways, waterways, airways. In roadways, it covers only motorized conveyance. If at all the goods are transported by bullock cart, you cannot have any number, right? Or coolie. Then it is more hand delivery. Then there is no EOL because it is not motorized conveyance. It is not motorized conveyance. Now, next point is, who is generally causing the movement? Who has to generate EOL? Who has to generate e-way bill? E-way bill has to be generated by a person who is causing the movement of goods. Who is causing the? Normally, who is causing the movement of goods? It is the consignor. Forget about the term supplier because now we are not focusing on supply, we are focusing on movement. So, normally who causes the movement of goods? Consignor. The registered consignor. Layman's language, registered supplier. But the right term is consignor. Registered consignor. But if I tell that consignor is not registered, consignee is registered, first condition, consignor not registered. Second condition, consignee registered. Third condition, consignee is known before the movement starts. Before the movement starts, which means I am the consignor, you are the consignee. If I am registered, you are all my consignee. If I am registered, for any movement to any of you, who is required to generate EOB bill? I am required to generate EOB bill. No questions asked. If consignor is registered, any scenario, who has to generate EOB bill? Consignor. If I am not registered, now let us take that scenario. If I am not registered, right? If my consignee is also not registered, then no, EOB bill is still required even by unregistered persons. We have discussed this in one of the point in your registration chapter. Handicraft goods. Handicraft, there was a statement used, even unregistered person can generate e-way bill. Recollect that statement. We'll be using it here again. So e-way bill is still required. Whose responsibility? Consignor's responsibility. Just because I am unregistered does not mean I need not generate. You might ask how. A person may not be registered on normal GST portal, but he can still take registration on e-way bill portal. Right? So even unregistered person can generate e-way bill. Even unregistered, just write the statement. Even unregistered person can generate e-way bill. Right? Now, second scenario, supplier is unregistered, that is consignor is unregistered, consignee is also unregistered, but before the movement starts, I clearly know that the goods are going to you. Consignee also knows that the goods are coming to my place. Then consignee has to generate e-way bill. Supplier or consignor unregistered, recipient or consignee registered, and recipient or consignee clearly knows that the goods are going to come to his place. The goods are going to come to his place. Then who's required to generate e-way bill? Consignee. But assume that consignor is not registered. Consignee is registered. But consignee does not know that the goods are going to come to him. Then consignor. Can this happen? Yes. Supposing I am an unregistered supplier, consignor. You are registered recipient, consignee. You have not given any purchase order to me. But generally I take the goods and come to your shop. And I said that this is called as chain sales. Right? I come to a shop that I said that these are the items. And I tell that if you like any of the items, you please purchase it. And you purchase it. Now, consignor is not registered. Consignee is registered. But consignee did not knew that the goods are going to come to his place before the commencement starts. Commencement already started, it got ended. It got ended. Whose responsibility is to that to generate e-way bill? Consignor, unregistered consignor. Let me put it in a very simple way. If consignor is registered, always consignor. When consignee will come? Three conditions. Consignor is not registered. Consignee is registered. Don't stop here. Third condition. Consignor is not registered. Consignee is registered. Third condition. Consignee is known before the commencement of the goods. Consignee clearly knows that the goods are going to come to his place. Only then the responsibility shifts on registered consignee. Registered consignee. Now, next question, whether e-way bill is required for goods carrying any value or goods carrying a value more than a particular limit. Goods carrying a value more than a particular limit. The limit is 50,000. The limit is, but that limit is consignment value. That limit is called as consignment value. Basically, what is consignment value? Invoice value. It is not value as per section 15. It is value as per section 15 plus GST. Plus GST. It is value plus GST. But it excludes something. It excludes exempt goods. You don't count exempt goods. You don't count. So, summary of the value is section 15 value plus GST minus exempt goods. Section 15 value of taxable goods and exempt goods plus GST on the taxable goods minus the entire value of exempt goods. Entire value of exempt goods. Value based e-way bill. E-way bill is generally based on value. If the value is crossing 50,000, which value? Consignment value is crossing 50,000, e-way bill is required to be generated. This we are talking about intrastate movement. Intrastate movement, state will decide the limit. Now, there are few cases where you require mandatory e-way bill. You require mandatory e-way bill. When I tell mandatory e-way bill, what significance it has got? It means e-way bill is required to be generated irrespective of the value. If it is 10,000 or 20,000 or 5,000, even then you generate e-way bill. First, when principal is sending the goods to job worker outside the state. Principal is in the state of Maharashtra, job worker is in the state of Gujarat. So, principal is sending the goods to job worker. Basically, it is not supply. Delivery challan is not document. Isn't it? Principal to job worker, there's no sale, there's movement. Principal will give fabric to the job worker will convert it into shirt and return it. Supply is neither of fabric nor of shirt. Supply is of job working charges, service. But this movement requires e-way bill. What will be the base document? Delivery challan. Delivery, but irrespective of the value, even if the value is less than or equal to 50,000, please generate e-way bill. Second, there is interstate movement of handicraft goods by unregistered person. This point we have clearly discussed in your registration chapter. If you are dealing with notified handicraft goods, you get the limit of 40 lakhs, 20 lakhs or 10 lakhs as the case may be, even if there is interstate movement. Normally for interstate supply of goods, mandatory registration, but interstate supply of notified handicraft goods, you can enjoy the limit of 40 lakhs, 20 lakhs or 10 lakhs as the case may be. You can still enjoy that limit, right? But when you are enjoying the limit, what happens? You will not be getting registered. But they tell that you don't be registered, but you generate. So an unregistered person is mandatorily required to generate e-way bill. An unregistered person is mandatorily required to generate e-way bill. So this understanding clearly you should have. Now, whatever you have discussed, we'll try to understand this. Normally, who is required to generate e-way bill? Normally, if the supplier is registered, you need not see anything else. It is registered supplier. You need not see anything else. If the supplier is not registered, but the recipient is registered and recipient is known before the commencement of movement starts, then that registered recipient, consignee. Here it is consignor. It doesn't mean that only a registered person can generate e-way bill. There are scenarios where even unregistered person can generate e-way bill. Now, can they delegate it to someone? Yes. Whether it is the consignor or consignee, e-way bill can be generated by whom? Transporter. Transporter may be authorized to generate e-way bill. Transporter may be authorized to generate e-way bill, or electronic commerce operator or courier agency when the goods are supplied through them. Supposing I am supplying my goods through Flipkart or Amazon. Just understand the scenario, why they have given this. The transporter will understand it very clearly, because when I am sending the goods to transporter, I don't know which vehicle is going to use. So I will just fill part A, vehicle number, who is going to fill? Transporter, which means you have to give authorization to the transporter. Clear? Clear. So transporter can generate e-way bill on your behalf. Transporter can generate e-way bill on your behalf. Normally you have to do your work. But can you authorize transporter? Yes. Now can you authorize your electronic commerce operator or courier agency? Yes. But this authorization is special authorization. That is a normal authorization. What special authorization? If I am selling my goods to Flipkart or Amazon and my goods are stored in their warehouse, order will come, I will get a information notification, also Flipkart will get a information notification, and accordingly my goods will be dispatched. By whom? Who will dispatch my goods? Flipkart or Amazon will dispatch my goods. Supplies by me. Supplies by me. But who are actually dispatching the goods? Flipkart or Amazon. Will I know when the movement will start? No. Will I know in which vehicle they have transported? No. Who will be generating e-way bill? Electronic commerce operator or courier agency will be generating e-way bill, because I will know that there is supply, but I will not know the other details. E-way bill is focusing on movement. Movement is not even aware. I don't know about the movement. I know there is a supply being happening, but I will not know of the movement, and I may get to know supply by the end of the day when I am checking my messages and mails. Correct? For 2-3 days I am not at all opening my messages and mails. I have gone for a small trip. But whether my sales will continue on Flipkart or Amazon? Yes. Right? They will be dispatching the goods. So now who is getting special authorization to generate e-way bill? This electronic commerce operator or the courier agency, they will get the special authorization to generate e-way bill. Are you guys clear with this understanding? Right. Now, this value based mandatory e-way bill. If I tell principal is in Maharashtra, job worker is in Uttar Pradesh, you have to answer it as mandatory e-way bill. Should I see the value? No. But if I change the question, I tell that principal is in Maharashtra, job worker is also in Maharashtra, then it is value based e-way bill. If the value is crossing that particular limit of Maharashtra, I am not telling 50,000, particular limit of Maharashtra, generate e-way bill. If not, no need of generating e-way bill. And in both these cases, please don't forget the fact that the basic document is not invoice. The basic document is delivery challan. And if I tell that there is a supply of handicraft goods, notified handicraft goods, say from Maharashtra to Uttar Pradesh, and that supplier is exempted from registration because of section 23, he is getting a relaxation from section 24. He was covered by compulsory registration section 24, but 23 helped him out. Then because you are getting one relaxation from registration, the other place it is telling that you have to generate mandatory e-way bill. But if I tell that you are supplying handicraft goods from Maharashtra to Uttar Pradesh and you are registered, there is no relaxation, you did not go for that relaxation, or your limit was more than 40 lakhs, 20 lakhs, 10 lakhs, then value based e-way bill. Then you will go for value based e-way bill. And if at all you are going for value based e-way bill, tell me, what is your consignment value? What is your consignment value in the first case? Taxable goods 45,000, GST 18%, 8,100. What is your consignment value? 53,100. Whether you have to generate e-way bill? Yes. In the second case, exempt goods 60,000. What is your consignment value, by the way? 0. Because consignment value is section 15 value plus GST minus value of exempt goods. So finally it will become 0. No e-way bill. If I tell there is supplier who is supplying both taxable goods and exempt goods in same transaction. Taxable goods value is 30,000 plus GST 18%, 5,400. And exempt goods value is 30,000. What is your consignment value? What is your consignment value? It will be 35,400. So it will start with 60,000 plus 5,400 minus 30,000. Now whether it is crossing the limit? No need of e-way bill. Assuming that the movement is interstate. We are focusing only on interstate movement. Are you guys clear with this understanding? Now, moving on to the next part of the understanding. Now you have understood that when is e-way bill required to be generated, isn't it? E-way bill is required to be generated for specified movement of goods, which you have understood. The nature of goods, limit, etc., who has to generate, etc., all these things you have understood. Now the next point is, whenever e-way bill is generated, how many parts it will have? The form is EWB01. It will have part A and part B. To make it your life very simple, part A will contain the basic document details. Just go through these documents. You can write near this point, it will contain base document details. Consignee, consigner, invoice number, bill of supply, bill of entry, delivery challan. Actually, you need not focus on anything else. It will contain the details of invoice or bill of supply or delivery challan or bill of entry. That's it. Obviously, invoice or bill of supply or bill of entry or delivery challan will contain the name of consignor, consignee, goods value, quantity, etc. Everything will be covered there. Everything will be there in the. It is copy paste of the information that is there on the base document. And part B will contain what? Part B will contain the vehicle number. Part B will contain the vehicle number. Right. But in case of, this is in case of road. In case of railways, airways and waterways, it will have railway receipt, airway bill, bill of lading number. It will not be that particular train number and all. It will be railway receipt or airway bill or your bill of lading. Bill of lading is a document. See, when the goods are moving through road, the supporting document is consignment note. Consignment. So when it is moving by road, you don't put the details of consignment note, you just put the vehicle number. You just put the vehicle number. But when the goods are moving through railways or waterways or airways, you are not putting that number. You are giving the details of your railway receipt or airway bill or bill of lading. Now you may ask, what are these documents? These are the documents of title to goods. The person who is having that document will go and take the goods. We call it as document which gives you the title to take the delivery of the goods. If I have a railway receipt, when the goods are moving through rail, and if I have the railway receipt, I will go to the railway and give that railway receipt and take the goods. I may be the owner, I may not be the owner. I may be the owner, I may not be the owner. But that document, when I am giving it to the particular railway department, or say it is to airline company, or to say when I am giving it to shipping line company, they will hand over me the goods. They will hand over me the goods. They will not check whether I am the owner or not. They will just hand over me the goods. So this point you need to understand. If it is road, we are not entering consignment note number. We are just putting the vehicle number. Because similar document for your railway receipt or airway bill or bill of lading for road is consignment note. But here we are not putting consignment note, we will just give the vehicle number. Vehicle number, that's sufficient. Now you will actually connect this or understand in further discussion why it is happening like that. You will understand why for road special treatment, why for railways, airways and waterways special treatment. Wait for a few minutes, you will understand that. Now understand that part A will only generate unique number. Part A will only generate your unique number. It will not generate EV bill. It will only generate unique number. Unique. Only when you fill your part B, EV bill is generated. Part A will generate only and only your unique number. Part B will generate EV bill. Just by filling part A, it doesn't mean EV bill number is generated. No. There are a lot of cases where you will get notices on the portal where you have only filled up part A and department is sending you notice that part B is not filled, so it is not a valid EV bill. Only part B will generate your EV bill number, and the time limit to convert that part unique number to EV bill number is 15 days, which means once you generate unique number within 15 days, make sure that you generate EV bill number. If not, again you have to fill up part A. Again you have to fill up part A. It is just like your CPIN and CAN, common portal identification number and challan identification number. Right, part A will generate only unique number, and if at all you want to convert to EV bill number, you have to give the vehicle details. The validity of that is 15 days. Within 15 days you have to fill up those details. So are we clear with this understanding? Now part A, who will fill these details? Part A. Part A details will be filled by whom? It will be filled by a registered person who is causing the movement of goods. We have understood who is causing the movement of goods. Normally it is a registered consignor. Special cases it can be registered consignor. Can they authorize? Yes, they can authorize to whom? Transporter or courier agency, electronic commerce operator. Transporter normally they can authorize. But courier agency and electronic commerce operator, when they can authorize? When the supply is through them. When the supply is through them. Part B, who will generate? Part B, again is filled by registered person who's causing the movement of goods, which means it is registered consignor. Normally it can be registered consignee as well, but understand that if at all you are talking about road movement is by road, part B can be automatically filled by transporter, which means I need not give any authorization, automatic. How? When I am giving part A details, I will put the transporter's details. I will give the transporter's ID. Automatically transporter will know that he has to fill up part B. What is the logic? Logic is only transporter will know which vehicle will carry that goods. So if I am the registered consignor who is required to generate EV bill, part A I have to fill. Can I authorize transporter? I can, but normally I will fill. Normally what will happen? I will tell. Normally part A will be filled by the registered consignor. Part B, normally what will happen? I will give the transporter's ID. If my transport is through VRL Logistics, I will give the transporter ID of VRL Logistics. What will happen? VRL Logistics automatically will get an information that they are required to fill up part B. Why? Part B, when it is by road, what is required is? And who will know that vehicle number? If at all, assume that if I am required to fill the vehicle number, I have to again call VRL Logistics and tell that, okay, did you transport my goods? If yes, which vehicle? Which vehicle number? You tell me the vehicle number, I have to fill up part B. And this communication or this phone call is not for one particular person. VR Logistics will get thousands and lakhs of calls. If at all, part B is always required to be filled by the registered consignor. He'll always call up, please give me the vehicle number, and this vehicle number has to be entered before the movement starts. Not after the movement. Before the movement starts, this vehicle number has to be entered. You're getting this point? So this, it's called as automatic authorization. This is normal authorization. See, when I tell part A authorization is given to the transporter or courier agency or your electronic commerce operator, this is normal authorization, not automatic authorization, which means you have to specifically tell them. And when they are having authorization to fill up part A, they will fill up part B also. But this automatic authorization is for only what? Is only for movement by way of road, where in part B you have to give the vehicle number. Who will know the vehicle number? Only the transporter. So what I have to do? While filling up part A, I have to give one extra information. What extra information? The transporter details. My part A will always contain my basic document details. Along with that, if I give my transporter details, which is optional, which is automatically it will go and sit in my transporter's portal that he is required to fill up part B. My part B he is going to fill up. So that is now responsibility of the transporter. But understand that if transporter did not do his work properly, I will face the consequences. Right? I may take action against VRL Logistics later on, but department will collect penalty from the registered consignor. So that is finally my responsibility. And obviously I can take an action against the transporter, and if transporter wants to run the business, he has to reimburse that. Otherwise he'll have a very bad image, he'll not be able to run the business. So if at all there is a genuine mistake of the transporter where he has forgotten to put the vehicle number, which will never happen normally, because they are giving strict instruction before the movement starts whether EV bill of all the goods inside the truck is there or not. So that check is always done by the transporting companies. But if, for example, assume that there is a mistake which is done by the transporter, he has not filled up part B, who will be facing the consequences for non-generation of EV bill? The consignor or the consignee. Normally it is the consignor, but it might be consignee in certain cases, isn't it? Consignor or the consignee. Can they take that action against the other person who has made a mistake? Yes, that is their headache. So if I am the registered consignor, and if transporter missed to give part B details, I'll be facing the consequences. I'll make sure that I am getting that reimbursement from the transporter. That is the separate. GST department is not concerned. GST department will catch hold of me. GST department will catch hold of the consignor or the consignee. Are we clear with this understanding? Are we clear with this understanding? Now, you know that what is part A, what is part B, and when it is required to be filled up. Now, another question that comes up in your mind is when EV bill has to be generated. I think I have clearly answered this. EV bill has to be generated before commencement of movement. Before the movement starts, EV bill needs to be generated. If at all it is not happening, it is invalid. Then that EV bill itself is invalid. Not during the movement, not after the movement. Before the movement. But there are certain relaxations. Now let us understand these relaxations in a very simple manner. The transportation can happen via road, rail, air, vessel. In road, let us understand the difficulty. Consignor will give the goods to the transporter and transporter will take it ahead, isn't it? But when consignor is giving the goods to the transporter, he will use a small vehicle, isn't it? Then transporter will use his big vehicle and take the goods further. Correct? Now what are they telling? Consignor, you make sure that before the movement starts, you fill up part A and generate unique number. You need not fill up part B. You don't give your own vehicle details because from the consignor place to the transporter place, it will be consignor's own vehicle. Consignor's or an auto which is hired by the consignor. Some vehicle will be there not belonging to the transporter. So you just fill up part A. Let the transporter directly fill up part B and generate EV bill. So this vehicle details will not be entered. The first vehicle details will not be entered, but there is a condition. What is the condition? Condition number 1. Condition number 1 that the movement is between consignor and transporter. We are not talking about any other movement. From consignor to transporter. Because understanding what we are talking about. From consignor to transporter. Second, same state. The movement should be within same state and the distance should be only up to 50 kilometers. This point is wrongly understood by many that okay, for 50 kilometers EV bill is not required. Incorrect. Even if the movement is for 500 meters, forget about 500 meters, 50 meters, forget about 50 meters, 5 meters, EV bill is required. EV bill is required. Then what is this 50 kilometers all about? This is talking about a very specific situation. From consignor to transporter, same state, 50 kilometers. Even in this case, EV bill initiation has happened. You fill up part A and send. You fill up part A and send. Part B will be filled on later. Can I fill up part A and part B both later? No. Before the movement starts, part A. Before the movement starts, part A. And before the movement starts in vehicle 2, part B. Before the movement starts in vehicle 1, part A. Before the movement in vehicle 2 starts, part B. So EV bill process is already started. EV bill process is already, but EV bill number is not generated. You have only given the basic document details. So consignor will fill up part A before movement starts in vehicle 1, but he will not fill up part B. Part B will be directly filled by transporter. Before the movement starts in vehicle 2. Before the movement starts in, but conditions are there. What are the conditions? The movement is bit from consignor to transporter. Second, same state. Third, if I tell that transporter's place and consignor's place is 70 kilometers, then before the movement starts, consignor should give part A as well as his vehicle, part B, vehicle 1. Then you will ask, okay, but the movement 1 is very small, 70 kilometers. Major movement, 510 kilometers is vehicle 2. Part B can be updated. Part B can be updated. So what transporter will do? When transporter is starting the movement, he'll update part B. He'll update part B. This entire thing is there to avoid updation, to avoid duplication of work. Right? But this is only for road. First point, this is only for road. Second, movement is between consignor and transporter. Same state, 50 kilometers. But is there a relaxation from e-bill? No. There is a relaxation from certain procedural aspect. Before movement starts in vehicle 1, consignor should fill up part A, unique number is generated. And transporter directly will fill up part B before the movement starts in vehicle 2. But if the conditions are not met, supposing the distance between consignor and transporter is 70 kilometers, then before the movement starts in vehicle 1, consignor should fill up part A as well as part B, e-way bill should be generated, and before the movement is starting in vehicle 2 by the transporter will update part B. Vehicle number can be updated. Are you clear with this particular point? So this is the first relaxation. That we have discussed, and this relaxation is only when you're talking of for road. Only when you're talking by road. Now you may wonder why this relaxation is not there for railways, airways or your waterways. Because in case of railways, airways or waterways, basically you will fill up only part A. Part B will be filled up later on. So part A will be filled up in the beginning, just like this. Before the movement in vehicle 1 starts, part A will be filled up, but part B will be filled up later. Because in case of railways or waterways or airways, vehicle number is not given. What is given? It is railway receipt, airway bill or bill of lading. That should be given in part B, and e-way bill will be generated. So it will be done later on. It will always be done later on. Unlike roadways, there is an option to do it earlier or later, etc. That it will always be done later. So when you are transporting the vehicle through your railways, waterways or airways, part B will be filled up only later. It is always filled up later only. Right? Because you will get the railway receipt or airway bill or your bill of lading sometime later. But for railways specifically, they are very cautious. At least make sure that it is filled up before delivery is taken. Railways will not hand over you the goods if e-way bill is not generated. So they are not telling when to fill up, what is the time, reasonable time. They are telling that reasonable time fill up part B. But what is that reasonable time is not answered anywhere. That reasonable time is generally what? For railways it is before, if at all e-way bill is not generated, the railway department will not give you the goods. So before the opposite party takes the delivery of the goods, e-way bill should have been generated, which means part B should have been filled up. Now you may ask, what about airways and waterways? It is a reasonable time. There is no time, that is reasonable time that you have to fill up and close your part B. Right. Now, this entire thing that we have discussed is given in this particular example. If I tell that transportation is through your own conveyance, or hired conveyance or public conveyance, your own vehicle or your hiring or public conveyance, then before the movement starts, part A as well as part B should be filled up. There is no transporter involved. Your own conveyance or hired conveyance or public conveyance, there is no transporter involved. So before movement starts, fill up part A as well as part B. But if I tell that the transportation is by road through a transporter, right? See, what are the difference between hired vehicle and transporting vehicle? Hired vehicle, you will have only your goods and you will control the movement of the goods. And when you talk about transporter, you are only one person. You will not know which vehicle. You will just tell that this is my goods, please transport it. which vehicle they are going to use, etc. You are not aware. So transporter case, what they are trying to tell, you just fill up part A before the commencement of first vehicle. Part B will be filled up later on. But conditions, the movement is between consignor and transporter within the same state. Distance is up to 50 kilometers. Before movement starts in vehicle 1, your own vehicle, fill up only part A. And before transporter is using his vehicle, vehicle 2, he will fill up part B. He will fill up part B. So e-way bill will be generated later on. Now if I tell that transportation is by rail, initially what will be filled up is only part A. If I tell that it is by air or vessel, what will be filled up is only part A. Part B in all these cases will be filled on later. But for rail, they have given a special point. They have given a deadline. You fill up part A initially, before movement starts for part A. Part B can be filled later on. For rail, they have said, what is the end time? What is the end time for rail? Before the opposite person comes and takes the delivery, make sure that part B is also filled up. Part B is also filled up. So that is there in this particular case. Now talking about other points, we can have this master example and complete all these other small points. Master example. So very simple master example, understanding all the implications. If I tell that you are a supplier there in Jaipur and the movement is happening from Jaipur to Rajasthan, in Jaipur, Rajasthan to Bangalore, Karnataka. You are a consignor. You are a consignor there in Jaipur. Right. You are not sure of the weight. So you are sending the goods for weighment to a weighment bridge in Jaipur. Distance is 15 kilometers. There will be a list of exemption from e-way bill. There's a list of exemption from e-way bill. One of the exemption is if the movement is between consignor and the weighment bridge. If the movement is between consignor and weighment bridge. Distance is 20 kilometers, not 50 now, it is 20 kilometers. E-way bill is not at all required. When I tell e-way bill is not at all required, no part A, no part B. No part A. So in this case, there is movement between consignor place to weighment bridge to consignor place. But this movement will be by your delivery challan because there is no supply. There is no, but you don't require e-way bill because there is an exemption. There is an exemption from e-way bill. What is that exemption talking about? Consignor and weighment bridge. Consignor and distance. This is different from 50 kilometers. Whether part A is required? No, neither part A nor part B. E-way bill itself is not at all required. Now the goods are returned from weighment bridge. So both the movements are exempted. From consignor to weighment bridge, from weighment bridge to consignor, e-way bill is exempted. When I tell it is exempted, you don't require part A as well as part B, but now the condition is 20 kilometers. 20 kilometers. Now, after weighment is done, supplier of Jaipur is sending the goods to transporter A. Transporter A in Jaipur, same state. Distance is 40 kilometers. What will happen? Whether e-way bill is required? Yes, but you will fill up only part A. Before movement starts in, now this is actually vehicle 3. If you start seeing the vehicle number, this is vehicle 3. Now before vehicle 3 movement starts, part A should be filled up. No part B. Part A should be filled up. Transporter A in Jaipur now starts transportation in vehicle 4. Vehicle 4. Now what is required? Before movement starts in vehicle number 4, part B should be filled up. Part A will generate only unique number. Part will generate only now e-way bill is generated. Only now e-way bill is generated. Now transporter A in Jaipur during transportation of goods transfers the goods from vehicle 4 to vehicle 5. That's change of vehicle. That's change of vehicle. Now the goods are going in vehicle 5. Now e-way bill is already generated. What is required is? What is required is updation in part B. Updation in Part B. Now, the same transporter in Jaipur during the transportation of goods now is transferring the goods from vehicle 5 to vehicle 6, but this time vehicle 6 does not belong to the same transporter, it belongs to, now distance and all is not regular, so I am not seeing the distance. Now it is transport given to another. See, the previous point was same transporter, vehicle 4 to vehicle 5. Now, one transporter to another transporter, vehicle 5 to vehicle 6. Again, understand that updation is required, but this time technically it is called as assignment of e-waybill. Again, part B will be changed, but this time not only the vehicle number is changing, but also the transporter is changing. So, transporter being the same, vehicle changes, updation. Transporter changes, vehicle also changes, it is called as assignment of e-waybill. In both the cases, it is nothing but normal understanding, that is updation of part B. Now, finally, transporter B reaches Bangalore, the destination. Now, think of the scenario. Transporter B will keep the goods in his place. Consignee will come in his vehicle, vehicle 7, and take the delivery of the goods. So, he will take the vehicle 7 to the transporter's place and get back the goods. It is exactly opposite to the first scenario, consignor to transporter. Now, it is transporter to consignor. Don't you think that the same relaxation will be there? There it was consignor to transporter. Now it is transporter to consignee. Same state, 50 kilometers. There it was no need of part B. The relaxation was no need of, but now already part B is filled up. So what will be the answer? No need of updation in part B. See, here the relaxation was no need of part B. Now the part B is already filled up. So now the relaxation is no need to update part B. No need to update part B. See, when the movement starts from consignor to transporter, part A is there, part B is never even touched. So the relaxation is no need to fill up part B if it is consignor, transporter, same state 50 kilometers. Now exactly reverse. Transporter, consignee 50 kilometers, same state. You cannot tell no need of part B because part B is already filled up. But you can tell that no need to update. No need to update your vehicle 7 in part B. But if I tell that the distance is 70 kilometers, you have to update vehicle 7. You have to update part B. Are you clear with this understanding? Are we guys clear with this understanding? So that is given in your entire, this master example makes you understand the entire movement. Right, starting from Jaipur to Bangalore, 7 vehicles have changed. And what happens with each of the vehicle we have understood. If you see that example again, you will find that 7 vehicles have come into picture. Now, one interesting question. Please think and answer. You have the answer. Think and answer. It's because e-waybill thumb rule I have said you. If I tell that I am the supplier, Praveen is the recipient, and Praveen has a customer VP and he is selling the goods. So I sold Praveen the goods and Praveen sold VP the goods. I sold it for 1 crore plus GST. Praveen sold it for 1.5 crores plus GST. So that is supply 1, that is supply 2. I am there in say Tamil Nadu, Praveen is there in say Maharashtra, and this VP is there in say Delhi. Directly Praveen is telling that don't send me the goods. Directly send the goods to VP. So movement is happening from Tamil Nadu to Delhi. Movement is happening from Tamil Nadu to Delhi. How many e-waybill is required? How many supplies are there? How many supplies are there? There are 2 supplies. VJ to PJ, PJ to VP. There are 2 supplies. There are 2 supplies. Clearly there are 2 supplies, and I have given the numbers also. But movement is only louder. So how many e-waybill? How many EV bill? There will be only and only one EV bill. But now the question comes, who will generate? Now the question comes, who will generate? Now you have two answers. You have two options. Option number one. Option number one. That VJ will generate EV bill. VJ will generate EV bill, which is called as bill to ship to. Bill to Praveen Jain, ship to VP Vidyapeeth. Bill to ship to. Bill to ship to. Vishal Jain is billing to Praveen Jain, but he is shipping it to Vidyapeeth. Second option. Option 2. Praveen Jain will tell that Vishal Jain, you don't generate EV bill, I will generate EV bill. Now it is called as bill from, dispatch from. Billing will be from Praveen Jain's address, but dispatch will be from Vishal Jain's address. Bill from, dispatch from. Bill from, dispatch from. So there is a press release which talks about this, detailed press release, and summary is simple. Summary, if I want to tell summary, one moment, one EV bill. Simple. Either or. Either this or this. Either this or this. Which option do you feel is practical? Which option is practical? First option. Okay, let me tell you the problem in first option. First option, when Vishal Jain is generating EV bill, his tax invoice is 1 crore plus GST. Vidyapeeth will not be happy. Vidyapeeth will tell that Vidyapeeth has purchased the goods from whom? Praveen Jain. Praveen Jain is a person who has said Vidyapeeth, I don't have any profit. I don't have any profit. I get, and this bargaining is normal thing in India. So when Praveen Jain sold the goods to Vidyapeeth said that 1.5 crores is too much. Please give some discount. Praveen Jain said all these nonsense things. See, I don't have profit. This was a old stock. I am selling cost to cost. I am having very less profit. So I cannot reduce it. And Vidyapeeth said, okay, I understand. Business is dull, etc. All these stories. Business is very dull, market is very, very poor, etc. All these stuffs have been said by Praveen Jain to whom? Vidyapeeth. Now, if you tell that EV bill is generated by Vishal Jain, Vidyapeeth will get the information that EV bill value is 1 crore plus GST. Right? So, Vidyapeeth will get the information of Vishal Jain, all the details of Vishal Jain. Second, he will also get the pricing. He will surely call up Praveen Jain and tell that you are telling there is no profit, but you have purchased from Vishal Jain from 1 crore, and without even stocking the goods, you have sold me for 1.5 crores. Confidentiality. Praveen Jain will have a huge risk of losing the customer. Plus, profit margin will be disclosed. So, what is the better option always? Option 2. So, option 2, when Praveen Jain is generating a bill, what is his tax invoice value? And understand that in option 2, bill from is from Praveen Jain. Only dispatch from Vishal Jain is there, and that too name will not be there. Only address will be there. Only address will be there. Even GST number will not be there. Only address would be there. Even in ship to, only address will be there. So, Praveen Jain, if at all, is asking Vishal Jain to generate EV bill, Praveen Jain will give only the address of Vidyapeeth. In this ship to, only address will be there. Whether it is ship to or whether it is dispatch from the other party's details, that will be only address. Only address. So, which option is now beneficial? Think and answer. Option 2. Option 2. Price is not revealed, and even the opposite person's name is not revealed. Now you may still wonder how option 2 is practical, because movement will start from Tamil Nadu. Don't worry. Praveen Jain will tell Vishal Jain to hand over the goods to a particular transporter. Let him generate EV bill till that. Right? Then Praveen Jain will call the transporter. We'll tell that forget about those invoice and those document. That invoice of Vishal Jain and EWA bill of Vishal Jain, send it to me to my courier address. Don't have it in hand. Don't have it in. I am sending my invoice and EWA bill. Just mail and you take the printout. And you carry my invoice and my EWA bill. Rather, even the address will not be of Vishal Jain in most of the cases. It might be of the transporter. See, either the Vishal Jain, Praveen Jain will ask the transporter to go to Vishal Jain place and collect the goods. So, in that case, address will be of Vishal Jain. There is only one EWA bill. Even Vishal Jain need not even bother to generate EWA bill. So, what will Praveen Jain tell? This is my transporter. He will send the transporter and tell that collect their goods directly from Vishal Jain's factory. So, bill is from Praveen Jain, but dispatch is from Vishal Jain's factory. That is more than sufficient. And Praveen Jain will clearly give instruction to Vishal Jain. Don't give invoice to transporter, send invoice to me. Do not even dare to give invoice to the transporter, send it invoice to me. And Praveen Jain will instruct the transporter, carry my invoice and my EWA bill. My invoice and my EWA bill. Nothing will happen. Nothing will happen. No one will ever know. Right? So this is Darren press release. The base understanding was there is one movement, therefore there can be only one EWA bill. Now, who has to generate? You have option. You have options. So that is given that. That is given in an example which I will not discuss again. We have discussed in this entire chart itself. So this yellow color point talks about two things. One is all about your Mumbai, Ahmedabad, which we have discussed. One is about special economic zone, we have discussed. One is about your bill from bill to ship to, bill from dispatch from, which we have discussed. Now, the next question that comes up is validity. Validity. For how long your EWA bill is valid? What is the validity of part A? Within 15 days, convert it to part B. If not, again generate part A, then convert it to part B. That is it. What is the validity of part B? Only part B will generate EWA bill. What is the validity? What is the validity? If I want to make your life very, very simple, normal validity is 20 kilometers one day. 20 kilometers one day. Each 20 kilometers one day. If I tell it is 22 kilometers, how many days? 2 days. 40 kilometers. 39 kilometers. 43 kilometers. 59 kilometers. Simple. Special. 200 kilometers. Every 200 kilometers or part 1 day. Every 200 kilometers or part thereof 1 day. Now 200 kilometers or part thereof. If I tell if it is special case, if it is 159 kilometers, 29 kilometers, 10 kilometers, 190 kilometers, 230 kilometers, 240 kilometers, 290 kilometers, 390 kilometers, 399 kilometers, 401 kilometers. You will tell that 20 on one side and 200 on one side, there is a huge gap. Difference is not small, difference is multiplication of 10. Difference is huge. Now normally it is 20 kilometers 1 day or part thereof. This special case is what? The answer is very simple. If at all I tell that transportation is by way of over dimensional cargo. Transportation is by way of over dimensional cargo or multimodal shipment. Multimodal shipment. Then it is 20 kilometers. Smaller distance but huge rate. Because they will move slowly. They will move slowly. Though it is 20 kilometers, rather this is special case. I have said it reverse. This is special case. Normal case is 200. If the movement is by way, if I tell the movement is by way of rail or road or air, it is normal. 200 kilometers 1 day is sufficient. 1 day is. So special cases when it is a multimodal over dimensional cargo. If you might wonder what is over dimensional cargo, you will not see in the normal cities. You will see only on the national highways. Over dimensional cargo, you will see in many movies. Right? If I'm not wrong, Singham 2 was one of the movie. Right? A normal truck kind of thing, but it will have multi-dimension. You cannot find it in cities. The dimensions is not one. The dimensions is multi-dimensional truck, over-dimensional cargo, or multimodal shipment. Multimodal shipment means the movement is by way of road plus rail plus vessel, or road plus vessel, or rail plus vessel. At least one leg is vessel. One leg is. So first scenario is over-dimensional cargo. Second scenario is multimodal shipment where one leg is at least. Now if I tell it is only road plus rail, then you go to 20 kilometers because it is both fast. Multimodal shipment means different modes of shipment. One leg should be at least vessel. Then you go to 20 kilometers. What are the two scenarios where it is special case? One, over-dimensional cargo because it will move very slowly. Second, there is multimodal shipment where at least one of the leg is vessel. If I tell there is rail plus road plus rail, 20 or 200? Road plus rail, 20 or 200? 20 or 200? 200 kilometers one day. In these special cases, you focus on 20 kilometers one day. Road plus rail, it will move fast. You don't require more validity. So road plus rail, loud and clear. Road plus air, rail plus air, road plus rail plus vessel, rail plus vessel, air plus vessel. So vessel means you go back to 20. Right. So just think of that speed. You will understand why they have given this variation. Why this variation will be very clear. Are we clear with this time limit? Within this validity, the goods should reach the destination. Otherwise, finished. Otherwise you are not that movement again. They'll have a problem that you did not give the goods within time. So when you are talking about distance, 410 kilometers. If I am focusing on special case, if at all I am focusing on special case will be over-dimensional cargo or multimodal shipment where at least one leg is vessel. 490 kilometers, 410 kilometers. Special case will focus on 20 kilometers. So 410 kilometers, it will be 21 days. 20 point something will give you 21 days. 490 kilometers, 24 point something, it will be 25 days. This is special case. If I talk about a normal case, then normal case means the focus will be on 200 kilometers. Same 410 kilometers. It will be 3 days. 590 kilometers. Same 3 days. And please understand that this calculation will start from part B. Not when you have filled up part A. It will start when you have filled up part B for the first time. And updating part B will not change the validity. Just because I am updating part B again and again, my validity will be the same. I may have updated in 590 kilometers, I may have used 5 vehicles. So I was updating part B again and again. But my validity is 3 days. My validity is 3 days. Now, when validity will start is a big question. When your validity will start is a big question. When your validity will start? Your validity will start from the midnight. To make you understand this, a small example is taken. Supposing there is 780 kilometers normal vehicle means, normal case means 780 kilometers how many days? 4 days. Correct. E-way bill is generated on 12/4 midnight of 14th of March, which means 12/4 AM. 12/4 AM on 14th of March. When is the validity getting over? You have 4 days. First day will start when? Just understand in a very simple way. First day will have always extra. So first day will not end on your 14th, 15th midnight. It will end on 15th, 16th midnight. which indirectly means your first day will have 47 hours 56 minutes. Second day 16th 17th of March. Third 17th 18th. Fourth 18th 19th of March. Why I am writing 18th 19th? 18th midnight, 19th early morning. So your 4 days will end on 18th 19th of March. But if I change a small question, very small question, if I tell that 6 minutes gap, you generated e-way bill on 11:58 p.m. of 13th of March. If you see the time gap, I have drafted a question in such a way that the time gap is only 6 minutes. It's only 6 minutes. You generated e-way bill on 13th of March, 11:58 p.m. 11:58. When will your first day end? 14:50. Second day. Third day. 16. 17. Your first day will have something extra, but it is only 24 hours 2 minutes. Something extra is only 2 minutes. So when your validity will end? Because it is same 620 km, 4 days. Understanding that it is 4 days. 17th 18th of March. What was the time gap? 6 minutes. 6 minutes has changed your validity. It can be, if at all you have done 6 minutes earlier, it is 17th 18th of March, last day. If it is done 6 minutes later, it is 18th 19th. 18th 19th. 6 minutes gap gives you one extra day. So this examples makes you understand that okay, how that counts. I'll make it very simple. First day will always be more than 24 hours. You'll never make a mistake. Thereafter it is strictly 24 hours, 24 hours. First day will always be more than, in this case it was 24 hours, 2 minutes. In this case it was 47 hours. It will always be more than 24 hours. Less than 48 hours but more than 24 hours. First day you will always get extra. So that is how your validity is counted. Your validity is counted. Yes, this have been asked by ICA when you talk about your MCQs, etc. This is a very interesting question that you will find it in many of the cases. Very simple question, but validity of part B. What is the validity of part A, by the way? What is the validity of part A? Validity of part A is 15 days. Now to end this entire concept of e-way bill, just the last point, the basic concept we have done with all the other small concepts, basic end concept. Can you cancel the e-way bill? Yes. Supposing you have wrongly generated e-way bill, consignor has wrongly generated e-way bill, can it be cancelled? Yes, but there's a time limit, 24 hours from generation or before the vehicle is intercepted by a proper officer, whichever is earlier. If vehicle is not intercepted, 24 hours. If vehicle is not intercepted, if vehicle is intercepted, after that you cannot cancel. If you have wrongly generated e-way bill, can it be cancelled? Yes. 24 hours from the generation of e-way bill or before the vehicle being intercepted by proper officer, whichever is earlier. Whichever is earlier. This is for consignor to cancel the e-way bill. Now supposing I am the consignor who have generated e-way bill, but instead of my consignee 1, I have generated e-way bill against consignee 2. Consignee 2. The opposite person cannot cancel, because if I have generated e-way bill, only I can cancel. The opposite person can either accept or reject. Can either accept or reject. Now what is the time limit for the opposite person to accept or reject? 72 hours or actual delivery of goods. He is getting the actual delivery of goods, whichever is earlier. Basically 72 hours. Within 72 hours, the opposite person should either accept, because e-way bill will be there on 3 persons portals. One consignor, one transporter, one consignee. So if I am generating e-way bill, you will also get an information. You'll also get an information. Either you can accept it or reject it. How much time is that? 72 hours. If you don't take any action within that 72 hours, it is deemed to be accepted. Which means that belongs to you. That belongs to you. Actually, that is also causing a problem. You might wonder what is the problem to the consignee. Supposing I was to generate e-way bill against consignee 1, I have generated against consignee 2. And if you don't reject it, tomorrow department may come to a place and they tell that, oh, you have inward e-way bill from this particular consignor, which means you should have purchased the goods. But you don't have purchase invoice, which means you have not accounted the goods. Which means you have not accounted the purchase, means your sale is also unaccounted. If your purchase is unaccounted, but obviously your sale is also unaccounted. So there might be a problem, big problem for the consignee who never purchased any item from a consignor but is getting inward e-way bill. So that needs to be accepted or rejected within 7 days. See, the person who is generating e-way bill has, generally he is consignor, he is having time to cancel it within 24 hours. Special case is before the officer stopping the vehicle for interception. That is a special case. But normal time limit is 24 hours. If I have generated e-way bill, I have how much time to cancel it? And the opposite party is not generating e-way bill. So he is not having any option to cancel it. Opposite party can either accept or reject. He cannot cancel e-way bill. He can either accept that it is his e-way bill, inward e-way bill, or reject. How much time he is having? 72 hours. He is having 72 hours. So that is given. That is given. Are you guys clear with this entire understanding? Are you guys clear with this entire understanding? So now if you look at this entire basic concept of your e-way bill, you will find that everything is discussed. Can validity be extended? We have discussed the validity, isn't it? What is the validity of part B and all? Can it be extended? Yes, it can be extended by commissioner in certain notified goods. It can be extended by transporter himself in exceptional cases, which means if there is an accident, there is a breakdown of vehicle, there is a strike in that particular city, right? Extension is possible, but extension should be applied within 8 hours. 8 hours of the original validity. So when your original validity ends, within 8 hours you have to apply for extension. Who will apply for extension? You will never know. Who will know? Transporter. Transporter will know. Transporter will know. So extension can be that. Forget about the special first point because it is for notified goods. What is more important is the general point that when your validity gets over but the goods are not yet delivered, can you extend it? Yes, but it is allowed only in exceptional cases. Now what can be the examples of exceptional cases? Accident of the vehicle, breakdown of the vehicle, strike in the city, COVID lockdown, isn't it? These can be all the exceptional cases. But in those exceptional cases, validity should be extended within 8 hours. Within your 8 hours, validity should be extended. Now, if you look at this cancellation, acceptance, rejection, all these points we have discussed. The point given here, cancellation or acceptance or rejection, assignment we have discussed. One transporter to another transporter, you don't call it as updation, it is called as assignment. It is called as assignment. Now there's something called as your consolidated e-way bill. Very simple concept. Consolidated e-way bill is only for the transporter, which transporter will generally not do. It is only for the transporter, which transporter will generally not do. Supposing all your goods I am carrying, you are generating e-way bill. Now I am having an option to consolidate all your e-way bills into one. Who can do it? Who can do it? Only and only by transporter. It can be done only and only by a transporter. Only and only by a transporter for all the e-way bills in a single conveyance. Is it mandatory or optional? Understand that transporter will not take that headache. Because all of you have already generated e-way bill for your goods. I am carrying say 20 persons goods in my truck. All the consignment is having e-way bill. I will be consolidating all and putting in one. Only I'll know what all goods are there. So who can do this consolidated e-way bill? Only a transporter. Now you may wonder why he'll take that headache. The only advantage that is there is updating is easier. If the vehicle is changing, updating is easier. In the consolidated e-way bill, if I update the vehicle number, automatically it is done. Otherwise, I need to update in all the 20 e-way bills. So that is the only advantage. Otherwise, this is an headache for the transporter. Transporter will never go for this option generally. Why? It is increasing his work. It is increasing his work. The only advantage that is that if transporter knows that after some point of time the vehicle will change, and instead of updating all the e-way bills separately, let us consolidate it now once, and then later on updating will be there only in the consolidated e-way bill. So that is the only advantage that can be there. Can part B be updated any number of times? Yes, we have discussed. And there is an exception that also we have discussed. The last transaction from transporter to consignee, 50 kilometers, same state, no need of updating. This also we have discussed. Now, validity of part A, have we discussed that validity? It is 15 days. Validity is 15 days. Now we are talking about communication of 3 portals. Communication of 3 portals. Normally, if e-invoicing is there, you will first give that information in e-invoicing portal, which will go and sit in your e-way bill portal and GSTR1 normal portal. 3 portals talking to each other. But you may tell that okay, there is no e-invoicing. It's not mandatory for e-invoicing is applicable only for certain persons. If it is not there, whatever details you give in your e-way bill portal will go and sit in your GSTR1. So here you are talking about 3 portals talking to each other. Here you are talking about 1 portal communicating to the other portal. If e-invoicing is applicable, first information that you will fill up is e-invoicing. That will automatically go and sit in part A of e-way bill and also GSTR1. If e-invoicing is not applicable, that e-invoicing portal is ruled out. Whatever you fill in part A of e-way bill, you have to fill up now. That will sit automatically in GSTR, which you may use or you may ignore. You may use it or you may ignore it. But communication between portals is happening. So that completes our entire understanding of your e-way bill basics. Yes, the basic provisions of e-way bill we have discussed. Now we will focus on certain other aspects of e-way bill, starting with exemption from e-way bill. So there are list of items for which you need not generate e-way bill. There is no requirement for generation of e-way bill. Now that exemption list is divided into 4 parts for ease of understanding. One is goods based exemption, one is your person based exemption, one is area based exemption, and finally other exemption, miscellaneous exemption. You see the goods based exemption, you have to be very careful with the words that they have used. The first point that is given there, first and second point talks about your LPG cylinders. The first point talks about household and non-domestic exempted category LPG. Household is domestic LPG, non-domestic but exempted category LPG. Now, take it this way. If at all LPG cylinders is ordered at your home, there is no requirement of e-way bill. There is no requirement of e-way bill. Right. Now, what normally happens when LPG cylinder comes? The person will bring a new cylinder and take the old cylinder. That new cylinder is cylinder with gas, no e-way bill, household. And that empty cylinder also does not require e-way bill. Also does not require e-way bill. Right. But if I tell that LPG cylinders is to hotels, the new cylinders that they are taking to hotels, that requires e-way bill. The empty cylinders that they are taking does not require e-way bill. Getting that point? if it is for your home domestic LPG, then the new cylinders which they are bringing to your home with gas, no EV bill. Empty cylinders taking back, no EV bill. But it's for hotels, and assuming that they are not covered by non-domestic exempted category. Assuming that they are not covered by non-domestic exempted category. Small hotels may be covered, but not everyone. So non-domestic exempted category, they are not covered. Then new cylinders with gas, that requires EV bill. But the empty cylinders taken back, no EV bill. No EV bill. But if I tell that I am manufacturer of cylinders, I am selling those cylinders to LPG, whether EV bill is required? Yes. Now there is supply of cylinders per se. When empty cylinders are brought back, there is no supply. But now there is supply per se, that will be EV bill. So you have to be very careful with the exemptions. Each and every point has got a special point. Next category, you will find that they are talking about kerosene. But when they are sold in ration shops, public distribution system, PDS, ration shops. When they are sold in ration shops, public distribution system. Kerosene, when it is sold otherwise, normal shops, then it is EV bill is required. EV bill is surely required. Likewise, if at all you are talking about moving your residence, you are transferring your used and personal household effects. You are going from your old residence to new residence. So obviously movers and packers will come and they will take your used and personal goods from your old home to new home. It is covered by exemption. Otherwise for that EV bill would have been there. It is covered by exemption. But if you are shifting your office, there is no exemption. If the amount is crossing that limit, intrastate limit for intrastate movement, interstate limit for the interstate movement, EV bill is required. Though there is no supply, but EV bill is required. So here what is covered is personal effects. You can write shifting of home, residence, not shifting of office. Are you clear with this understanding? Next, certain special items like your currency. Banks will move cash from one place to another. That doesn't require EV bill. I think I have explained you the logic. So when you talk about currency or precious stones and metals, jewelry, gold and silversmith swaps, logic is simple. Secrecy. Logic is simple. That requires secrecy. Be it currency or be it jewelry items. That requires secrecy. No need of EV bill. So this is all in one category. Currency, precious stones, metals, jewelry, gold and silversmith swaps. Read it as one word. Cash and jewelry. No EV bill. Next we are talking about worked and unworked coral. Coral is a special item. They say that for this item we don't require EV bill. Then the next two items are again connected items. Non-GST goods, petroleum products, 5 notified petroleum products, alcoholic liquor for human consumption, Schedule 3 items and exempted goods does not require EV bill. Except de-oiled cake does not make any sense, because even if we talk about de-oiled cake which is exempted, even then because of consignment value EV bill will not be required. Because of the term consignment value which excludes value of exemption. See, understand that the provision section 68 was there but from 1st of July 2017 itself, but this exemption list was added later on. So there is some mismatch. You just remember, if there is no GST, no EV bill. So non-GST goods is covered, Schedule 3 is covered, exempted items is covered. No GST, no EV bill. Then postal baggage, you will find India Post van moving from here to there, correct? Postal baggage does not require EV bill. Empty cargo containers. See, lot of items will require cargo container. Supposing there is perishable goods, there will be a refrigerator inside the container. So when those vegetables are going, they will be there in a special container. Inside the vehicle there will be a special container. So when the vegetable is going, that requires e-way bill. But when the vehicle is coming back, it will have that empty container. That doesn't require e-way bill. Otherwise, that is also goods. Otherwise, that is also goods. Supposing, say for example, you are transporting glass. So that requires special containers. So when the glass is going, that requires e-way bill. When the truck is coming back, that will not have glass. That will have empty cargo containers. That doesn't require e-way bill. That doesn't require e-way bill. That is given. Goods based exemption. Goods based exemption. Now let us focus on person based exemption. Again, the concept of secrecy will come here. You are talking about Ministry of Defence. Highly secretive, isn't it? It should be highly secretive forever. So when you talk about Ministry of Defence, when the goods are being transported to them or from them, whether you require e-way bill? No. I am sending the goods to Ministry of Defence, or I am getting the goods from Ministry of Defence to them or from them in road or by railways or by airways or by waterways. No e-way bill. No e-way bill. Highly secretive. Any item, any mode, either to or from, everything is relaxed. But if you're talking about other government department, let us talk about, say, other ministries or other department of government. There is a relaxation, but that relaxation is very, very selective. It is only and only when you're talking about rail, only and only when you're talking about rail, and only when government is the consignor. Only when government is the, I'll put it this way. One side Ministry of Defence, one side other department of government. Ministry of Defence by railways, sending it to someone, no e-way bill. Other government department by railways, sending the goods, no e-way bill. But in the next case, Ministry of Defence sending the goods by roadways, railways or your airways. Sorry, railways, you're talking about your, apart from railways. So roadways, airways and waterways. Apart from railways, roadways, airways and waterways. Right? And to someone. Again, there is no requirement of e-way bill. But when you're talking about other department of government where the transportation is by other than railways, which means roadways, airways and waterways, to someone, e-way bill is required. Ministry of Defence receiving the goods, no e-way bill. Other government department receiving the goods, where even if it is by railways, e-way bill is required. So here there are two conditions. It should be by way of rail, and government is acting as consignor. Government is acting as consignor. And in case of your Ministry of Defence, whether it is by railways or waterways or roadways or airways, whether Ministry of Defence is a consignor or consignee, no need of e-way bill. Right. Person based exemption. Now next you are talking about area based exemption. Area based exemption. If both the places, the origin as well as destination, are under customs control, you don't require e-way bill. So there is a customs station and there is a customs, another customs station. The movement is between two customs stations, both are under customs control. No e-way bill. No e-way bill. But if I am talking about customs station to importer's place, then why? Both the places are not under customs. If both the places are under customs control, then no e-way bill. If one of the places is under customs control, the other place is not under customs control, you have to generate e-way bill. You have to generate e-way bill. Now next you are talking about transit cargo from or to Nepal, Bhutan. What does it mean? The goods is moving from, say, Jammu, Uttarakhand to, say, Assam, and it is touching Nepal or Bhutan. It is touching Nepal or Bhutan. So transit cargo is that way. Rather, I'll make it more clear example. That is not the exact right example. The goods is coming from Nepal, touching India, going back to Bhutan. That is transit cargo. From or to Nepal, Bhutan. It has got nothing to do with India, but it is touching, it is coming to Indian place and going back due to transportation convenience. So it has come from outside India, it is going to outside India, but during the movement, it is touching India. That is called as transit cargo. Transit cargo from or to Nepal, Bhutan. From Nepal via India to China, exempt. From China via India to Nepal, e-way exempt. From China via India to Myanmar, e-way is required. So transit cargo, the origin is outside India, destination is outside India, and it is only coming and touching via India. It is exempted when it is either one of the places is Nepal or Bhutan. If both the places are outside, other than Nepal, Bhutan, which means it is coming from China via India and going to Myanmar, e-way is required because it has come to Indian borders. E-way is required. For e-way, I am repeating again and again, there need not be any supply. So there is no supply happening in India because supplier is in China and recipient is in Myanmar. But for the moment, e-way would be still required. So relaxation is given only to our sister countries. Right, the history is very special. Nepal always wanted to be a part of India, but someone has to be blamed for telling no. That person said that no, you don't come. One country was telling that please include us. Right. If we are talking about current India, it would have included automatically. But at that point of time, they said no, we don't want you. We don't want you. Right. So always you will find many provisions in different laws, not only in GST, other laws, where you have special relaxation for Nepal and Bhutan only. And the answer lies in your history. We call them as sister countries. We don't call any other country as sister countries. We call Nepal and Bhutan as sister countries. Right. We have enemy countries too, but these are sister countries. Now next is movement of goods in notified areas by state or union territory. See, that is state specific, which means supposing in a state there will be a village area, remote village area, which even does not have any net facility proper. So state can tell that okay, in this area if there is movement happening, there is no need of e-way bill, because without proper net you cannot generate e-way bill. And you can take a classic example of Jammu and Kashmir. Lot of times government themselves disconnects net there. Correct? There you cannot expect them to have e-way bill. Because government tells that okay, net facility, because of the situation being disturbed, net facility is turned off. They will not have any net facility. So now that can be a classic example where Jammu and Kashmir would, now they are two union territories, they would rather notify this area and tell that okay, now the movement happening here does not require e-way bill, does not require e-way bill. So that is area based exemption. Area based exemption. Person based exemption, two are there. Both were dealing with government but different context. One is Ministry of Defence, one is other department. And area based exemption, three are there. And finally other exemption, we have already discussed both other exemption. One is when you are talking about movement between consignor and weighman bridge, if the distance is within 20 kilometers. Obviously, what is the base document? So it is happening with delayed children, but there is no need of e-way bill. There is no need of. If I tell that the consignor place and the weighman bridge is 30 kilometers, you have to generate e-way bill. You have to generate e-way bill, both part A and part B. Because part B is relaxed only if the movement is between consignor and transporter. Here there is no transporter. Right. Now, last point also we have discussed, if I talking about a non-motorized conveyance by road, which means we are talking about basically hand delivery or bullock carts, right, or non-motorized conveyance, a tricycle, right, non-motorized conveyance, right, you cannot have e-way bill. Part B you have to give vehicle number. Part B you have to give, don't forget that. Don't forget that if you understand part B, you have to give vehicle number. Think of the scenario. What you will give? You cannot give coolie number, you cannot give bullock cart number and all. Therefore, they understood it and it is being relaxed. It is exempted. It is exempted. Right. That is all about the list of exemption from EUable. The best way to remember is categorize it. Rather, if you see your study mat, you will all find all the exemption mixed in club. What we have done, made it simple. 4 categories: goods based, person based, area based, others. Now life will be very simple in recollecting all these points. Now, certain other provisions. We have done with your section 68, rule 138 and rule 138A. Now we are talking about other provisions, 138B, 138C, 138D and 138E. Now understand that there is something called as basic inspection and there is something called as detailed inspection or special inspection. Basic inspection is only of the document and the conveyance. So basic interception and verification will be of what? Documents. Will be of what? Document. What is the basic document? Base document will be tax invoice, bill of supply, delivery challan or bill of entry, and supporting document will be, so officer will check that document. Who will check? Authorized proper officer. Who's authorized proper officer? Who's authorized by the commissioner or authorized by an officer who's empowered by the commissioner. Either commissioner has authorized him or commissioner has said someone to authorize that person. Authorized proper officer. In simple language, I have said that them as squad officers. They are actually called as squad officers. They will not have work inside the department. They will always be found on the roads. Squad officers. Right, authorized proper officer. Now that is checking the document. Who will check the conveyance? Same. These are the only officers who will check the conveyance. Authorized. They will be checking the document as well as the conveyance. Now the question comes, can a normal officer who always have the desk work, these officers will never have desk work. But can a normal officer who is having desk work, which means he is always sitting in the department and he is having the desk work, can he do the verification of conveyance? Rare cases, yes. If that normal officer who is having the desk work, who is always sitting inside the department and doing the desk work, if he is having a specific tax evasion information against your company, he will take the approval of the commissioner or the empowered officer and go. Now you might think that why he is not giving that information to the authorized proper officer. He might have doubt that this company and the authorized proper officer have an understanding. So revealing this information will be highly risky, because the moment that information is given to authorized proper officer, he will immediately inform the company and nothing will be found. So what he will do? He is having a specific tax evasion case. He will take the permission of the commissioner or the empowered officer who was approved by the commissioner and directly go and check the conveyance. But he has to take a specific approval. Right. So that is that. And there is one provision which is very important and very necessary, that once physical verification is done of the conveyance and the goods, second time physical verification is generally not allowed, whether inside the same state or other state. If the goods are going from, say, Maharashtra to West Bengal, if the vehicle is intercepted, the conveyance is checked, the documents, the packing is open and the goods are checked, second time physical verification of the conveyance and the goods cannot happen. Even that might happen in Maharashtra, but the goods are going to West Bengal. Even West Bengal officer cannot do it. Why? In that moment already one time the conveyance and the goods are checked. Second time is not allowed. Rarest of the rare case, second time is allowed when the second officer, first officer has checked it, he has found nothing. Second officer has a very specific tax evasion information that after first checking was done, again something wrong happened. They stopped at some place and again they replaced the goods. Clear? So the general thumb rule is very essential, because once your vehicle is intercepted, the conveyance is checked, the goods are checked, second time inspection should not happen. Normally it is good, yes. Second time inspection is happening only if the second officer rather, is having a very special tax evasion information. And the second officer is, by the way, not the desk officer, he is a squad officer. So now we are not talking about desk officer. First officer was a squad officer, second officer is also a squad officer. But second officer generally cannot do it unless otherwise he is having a specific tax evasion information. So both the points are different. What was the first point? First point was, first time inspection normally is done by squad officer. Can it be done by a desk officer? Yes, if he is having a specific tax evasion information. In the second example, I am not talking about the desk officer. Both the officers are squad officer. In the movement from Maharashtra to West Bengal, already one time verification of the conveyance and the goods has happened. Second time is not allowed by the second time squad officer. It is allowed if at all he is having specific tax evasion information. Right. The movement special inspection or detailed inspection, which means the goods have been verified. That happens, then the proper officer has to give a report. He has to prepare a summary report. He has to first prepare a summary report within 24 hours. And that will happen from midnight. We have already discussed how the calculation will happen. 24 hours, and he has to give the final report within 3 days plus 3 days extension by the commissioner. Because normal checking is only checking the document and conveyance, okay, not a problem. But if you have verified the goods, opened the goods and checked the goods, so proper officer has to give the report, summary report within 24 hours of the inspection, and final report within 3 days plus 3 days extension given by the commissioner. This is there only to check that proper officer is not misusing the powers. When he is giving a report, he has to tell what all he has found. So one is summary report, immediately give it within 24 hours. Final report, give it within 3 days plus 3 days extension given by the commissioner. Give that final report. Are you clear with this understanding? Now, this is 138C. 138B is normal inspection, 138C is special inspection. 138D is the point that we have discussed in bird's eye view. If the conveyance is detained for more than 30 minutes, who can report? The transporter. Person in charge can report that information on the portal. He can report that information on the portal. That is 138D. 138D. Now, before seeing the other small points which are given there, what is 138E? 138E is you are prohibited from generating EO bill. If I tell that you are prohibited from filling part A of EO bill, obviously part B is not at all coming into picture. You are not in a position to generate EO bill. Not in a position to generate EO bill. Now you might wonder, who are the persons who are covered there? Now what are they talking about? If at all you are a regular taxable person or a casual taxable person, what will happen? If you are a composition taxable person, what will happen? If you are NRTP, what will happen? Right. So if you are a regular taxable person or a casual taxable person, you are not filed GSTR1, or because you have to file both. You have to file GSTR1 as well as GSTR3B. So here you have not filed GSTR1 or GSTR3B for 2 months or 2 quarters, as the case may be, because you may be under QRMP scheme or you may be under your MRMP scheme. Right. If you are a composition taxable person, you have not filed your CMP 08 payment for 2 quarters. If you are NRTP, you have not filed your GSTR 5 for 2 months. So here, friends, we are talking about your non-filer of returns. Non-filer of returns. If you're a regular taxable person, casual taxable person, you have either not filed your GSTR1 for 2 months or 2 quarters, as the case may be. Or you have not filed your GSTR3B for 2 months or 2 quarters, as the case may be. Either or. Either or. You might have filed GSTR1 but not 3B, even that counts. Right. If you are a composition taxable person, not filed CMP08 for 2 quarters. And if you are NRTP, not filed GSTR 5 for 2 months. 2 months. Then you will not be in a position to generate EVable. That is, it is called as blocking of EVable. It is called as blocking of EVable. There is one more scenario. Your registration is suspended. Your registration is, so this blocking of EVable, is there for non-filers, or your registration is suspended. Your registration is suspended. At least in case of non-filers of returns, commissioner can give relaxation. Rarely you can approach commissioner and can explain and tell that please allow me to then. For suspension of registration, even commissioner cannot do anything. If you are covered in the first category, basically your EVable will be blocked, but you can make a request to the commissioner and tell that, see, this is my difficulty, please allow me to generate EVable. So commissioner may consider, not always, may consider, but not for your suspension of registration. Not for your suspension of registration. This is called as blocking of EVable, 138E. 138E. But this blocking is only from the angle of the supplier who is generating EVable, which means if at all you are talking about this particular example, if you are talking about VJ is the supplier and PJ is the customer. VJ is the supplier and PJ is the customer. Please understand, and supposing, I mean, we are not talking about VJ and PJ. Basically, there is a person called as DK who is a defaulter. He is covered by either non-filing of returns or suspension of registration. So, this person is covered by non-filing of returns or suspension of registration. If he is purchasing something, supposing he is purchasing from VJ, generally who will generate EVable? VJ. Can he generate outward EVable? Yes. Can VJ generate outward EVable? Yes. Can DK generate inward EVable if at all VJ is unregistered, DK is registered, and DK knows that the goods are going to come in. Can he do it? Yes. Though he is a defaulter, he is in a position to generate inward EVable. So what is the problem here? If DK is a defaulter, when he is selling the goods to PJ, he cannot generate outward EVable. He cannot generate outward EVable. See, focus on this point. DK, though is a defaulter, he can generate inward EVable, but he cannot generate outward EVable. He cannot generate outward EVable. You're getting this point? So in this case, the focus is neither on VJ or PJ, the focus is on DK, who is a defaulter, non-filing of returns or suspension of registration. So when he is purchasing the goods, inward supplies, supplier can generate EVable, even he is in a position to generate inward EVable. But when he is selling the goods, he is not in a position to generate outward EVable. Outward EVable. The opposite person can generate inward EVable technically, but technically inward EVable comes when? Only if the supplier is, but he is not, he is registered. He is registered. So I am not even touching that area. Technically is possible, but in this case he is registered. He is registered. So I am focusing only on this outward. Just focus. DK, though is defaulter, inward EVable he can generate. If the supplier is unregistered, he is registered and he is aware that the goods are coming to him. But he is not in a position to generate outward EVable. Outward EVable. Are you clear with this understanding? That's everything about 138E. Now other small aspects. Understand that even through your SMS you can do your generate your EVable. generating cancellation through SMS is valid. And once you generate e-way bill, it is valid across India. It is not like when the goods are going from Maharashtra to West Bengal, every time you have to generate e-way bill. Throughout the movement, one e-way bill is valid. Right? And when you're talking about railways, please understand that for railways also e-way bill is required, but not for the leasing of coaches. There will be coach which is taken on lease by me. So, goods transportation railways. You'll find whenever you're traveling by rail, you'll always find goods railways. So, that railway, supposing 3 coaches of that rail I have taken on lease. I have taken on lease. So, that coach is also goods. That keeps moving here and there. Isn't it every time? For that e-way bill is not required. Railway to me, leasing of coach which will keep on moving, for that e-way bill is not required. And I'll be booking the consignments in that coach. For the goods which are going in that coach, e-way bill is required. You might tell why this particular point is given. Otherwise, understand that when I'm taking the coaches on lease from railways, that coach is also goods. That coach, say 3 coaches, is also goods. That keeps moving. For that, there is no requirement of e-way bill. And one basic point. Okay, if you understand this, this point is automatically understood. Think and answer. Just take a deep breath, think, listen to the question, then answer. There's a truck moving with your goods. For your goods, e-way bill is required. No doubt. For that truck is also goods. For that truck. Why? Truck is also goods. Who said no, it's not goods? But e-way bill is not required. Why? E-way bill is required for the movement of goods in a conveyance, not movement of conveyance. E-way bill is required for movement of goods in a conveyance, not movement of. Okay, let me give a better example. There is a car. There is a car showroom dealer who has purchased, say, 10 cars. That will come in a big truck. So there is a truck inside which there are cars. So both are vehicles. E-way bill is required for what? Why? It is movement of cars in that truck. E-way bill is required for cars. But e-way bill is not required for that. Are you getting that? So all these things are interesting. When you look at these points, you will have so much clarity of the provision. Truck is also good, but e-way bill is not required because it is movement of conveyance. But inside that truck there are goods. E-way bill is required for movement of goods in that conveyance. In that conveyance. So same way, if now that railway lease example will easily be understood. And understand that government understood that officers are harassing the assessee for small mistakes. They are levying huge penalty. So finally government said nothing doing. For minor errors, small errors, you can have a penalty of CGST 500 and SGST 500, not penalty as per section 129, which is a major penalty. You can have a small penalty. Now, what are all minor errors? Examples are given. Supposing there is a spelling mistake. Supposing there is a spelling mistake in the name of the consignee. You cannot tell that pay a huge penalty as per section 129. Take CGST 500, SGST 500 penalty, close it. Supposing there is a pin code error, but without affecting the e-way bill validity. So it is nearby pin code. Validity would be remaining the same. The small pin code error. Everything else is same. Address is perfectly written. Street number, door number, everything is perfectly written. But pin code, there is a small mistake, but it is not affecting the validity. Which means if you put the correct pin code also, or if you compare the wrong pin code, the validity remains the same. Minor mistake. There is a mistake in the consignee address, but location and other details are right, which means the building name is written as incorrect building name. Rather than writing this building name, you have written the nearby building name. All the other details are perfectly right. Or door number, instead of say 143, you have written 142. Everything else is perfectly right. It doesn't make any difference. It is there in the same road, hardly having a small gap of 20 meters. So for that you cannot tell that pay a huge penalty. Location is spot on, pin code is spot on, door number is wrongly written. Say 2, 3 door numbers here and there. Building number is wrong written. Say 2-3 buildings away. That's not a problem. Minor mistake. Not affecting entire thing. So have a penalty of CGST 500, SGST 500. HSN error. HSN mistake. 8 digit is the coding. You'll have 8 digit coding system. So first 2 digit of the HSN is correct and the rate is correct. Two things. First 2 numbers will be right and rate should be correct. Supposing there is a 4 digit HSN that you have given. First 2 numbers are right and the rate that you have given is right. The next 2 digits small and up and there here, ignore it. So it is not impacting any GST because GST rate is correct and first 2 digits are correct means industry is the same. Right. So ignore that. Have a minor penalty of CGST 500, SGST 500. Vehicle number. Instead of 1437, you have written 1473. Clerical mistake. 1437, you have written it as 1473. So 1 or 2 digits here and there, ignore it. It is not impacting anything. But you can easily find it out there is some typing mistake. Right. Or instead of 1, 2, 3, 4, you have written as 1, 5, 3, 4. Because if you see the computer, 2 and 5 is exactly above. So you can easily understand that it was a typing mistake. Rather than pressing it 2, you have pressed 5. Correct. So it is easily understandable. Ignore it. Either it is oversight. Sometimes you read it as 1437 as 74. Then we type it. Or you are typing it, you have read it correctly, but while typing in your computer, you have pressed a number up. Instead of 2, you have pressed 5. Or instead of 1, you have pressed 4. There are all minor mistakes. You have to ignore it. Or error in 1 or 2 digits of the document number. So your invoice number is 147347. So you written as 147346. Right. So again, everything is same. But 1 or 2 document number, that is not changing it. So these are all 6 examples where there are minor mistakes for which officer cannot go for a penalty as per section 129, which is a big penalty. So he can resort only to CGST 500 rupees penalty, SGST 500 rupees penalty for these minor mistakes. These are examples which are given in that particular circular. Right. So that completes our basic discussion of your e-way bill.